We have choices of where to put our investment dollars. Put it in stocks, put it in bonds, you can put it in real estate, you can put it in commodities, put it in gold. Is gold good or bad? Are stocks good or bad? Are bonds good or bad? They all have their purpose at certain points in time. It's relative to what you could be doing, which is where it becomes interesting. Gold is a better way, just highlighted one very simple fact, which is Wall Street tells us to own stocks and bonds, and yet gold has dramatically outperformed stocks and bonds over a very long period of time. And my summary on why that is in a growth environment, paper assets are what you want to own. In a debt environment, you want to own gold, because ultimately gold, and this is what most people really don't get, gold is simply a referendum on the US dollar. 90 years ago, a $20 bill and one gold coin were the same. They were equal, okay? It was the value of gold. They were interchangeable, by the way. We were on a gold standard, so you could walk into a bar with a gold coin, you could walk in with a $20 bill and buy the whole bar of drinks if you wanted. They were the same. By 1971, 1 ounce of gold was $42. By the year 2000, 1 ounce of gold was $250. Today, gold's somewhere around $2,000. So gold has gone up 100 times over the last 90 years relative to the dollar.
Money Revealed is an exclusive video series where self-made millionaires share their secrets on how they got rich. In this episode, you'll learn why you need to buy gold, how to make smart investments, and secure your financial future. These are the lessons that they don't teach you in school about making money. And we've partnered with the series creator Jeff Hayes to bring it to you on my YouTube channel. Enjoy.
Gold, 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 precious metals. We keep hearing about it. People talk about why we need to be in metals right now, especially gold is the conversation. It's throughout this series. It's in the headlines all the time. It's controversial. Some people think that you don't need it. Some people think you absolutely have to have it. Well, you're about to get a deep dive into gold. My partner and the producer of this series, Jeff Hayes, sits down with a guy who is one of the most compelling people I've ever met when it comes to talking about this subject, and that's Adam Baratta. He has written books on this. He talks about what's going on economically right now. He's anticipated and predicted a lot of what's going on in the midst of this crisis, and his accuracy has been chilling. So Jeff sat with him. It's a two-part interview because there's so much ground to cover, but you're going to learn some things that you absolutely need to know and understand if you care about your financial future. So enjoy this interview with Adam Baratta.
So, Adam,
Yes.
thank you for being here with us today.
It's my pleasure.
I've been looking forward to this. A little bit of a disclaimer. We met close to a year ago. We interviewed you. I was blown away. So I'm actually a customer of yours, and so there's a disclosure piece.
You are, yes.
So yeah, so I fall in the category of true believer. I'm really excited to let you share your info. I kind of want to start with your book. This was really interesting to me. You were publishing a book. It was on schedule before the COVID hit, and really predicted everything that's happening anyway. And so, as opposed to having to go back and change your book, is more like you went back and added some editorial. It's like, and it's with kindness. It's kind of like, see, I told you so. Not only is it that, it's even worse. Let's go back to what got you interested in the topic that you wrote your book about. Tell me how you came to this.
Okay, great. So I was not in the financial services business 7 years ago. I was actually in the entertainment business, and had some big things that happened over there. A big deal with Stan Lee, the superhero writer, Marvel Comics. Deal with the NFL and then the NHL. Then that kind of all went sideways, and I found myself unemployed with no real talent because I was in the movie business, and I needed a job. And I had a friend who had a job at a gold company, and I asked him if he could get me a job. And on the first day, I got hired, and I got a script. It was a one-page script, and said, "Here, go sell gold." And I was, freaked out. I had no idea what I was doing. I had no idea, it was physical gold inside of qualified accounts, IRAs. I didn't know what an IRA really was. And I decided if I was going to try and sell people on something, I better, number one, believe in it, and number two, really understand as much as I could about it. And that journey really led me to this story that I just became, incredibly attracted to and overwhelmed by, because it's a big story. And the more I got into it, the more I realized this is the story I'm supposed to tell. This is the story that people need to hear, because it's one that most people don't get. So I started writing content for our clients, for gold. The transition happened where I became so passionate about gold, I became one of the top gold salespeople at the firm. And I didn't really like the way gold was marketed. Gold is marketed with this, fear-based, doomsday kind of thing. And it's what sells. It's what, it's where gold is marketed. But I don't see gold in that way. In fact, what I was learning was a completely different story than that. And that's what I was talking to people I was talking about. And I sat down with my friend, who was also an excellent salesman and also really had the same kind of belief system, and said, look, I think we can do this better. I think we can do this better for the client with better education. And we decided to form our own firm. And that was in 2014. We started with 2 employees. And, through that process began me writing. To try and point people to the things that I was seeing that were so, that I didn't think people got that publicized enough. There's a Wall Street model. That Wall Street model is one that most of us follow blindly. And because I wasn't from the industry, because I wasn't someone who, came up in that, and I should have been. I was supposed to do my JD MBA at Wharton and Penn out of college, and told my dad I'm going to go to LA and be in the movie business. So I had, friends, family that are lawyers and, financial advisors and hedge fund managers. And so I'm very familiar with that kind of training and upbringing. And I think because I came to it from the outside, just looking at this story, it really was something that I thought people needed to hear. So that culminated in the first book, which was Gold is a Better Way, and Other Secrets Wall Street Doesn't Want You to Know. And the big conclusion, I guess, of that book was that the equity markets are really fueled by the Federal Reserve. At the time, the Federal Reserve was promising that they were going to raise rates. They're going to normalize. We had 7 years of 0% interest rates, and now we're going to start raising them. And they were also going to start taking money off the balance sheet. And that was happening.
So hold on right there, because what does it mean for the Fed to take money off of the balance sheet?
Great question. So what the Federal Reserve does, they control the money supply. That's their job, okay? And the balance sheet is the way they measure the money supply, the way they measure, how much money has been created by the Fed. And what the Federal Reserve holds on the balance sheet is actually paramount to some of the things we probably want to talk about. But that's what the Fed does, is they control the money supply. And when they lower rates and add to the balance sheet, it's called monetary easing, okay? And when they raise rates and take money off the balance sheet, it's called monetary tightening. And the premise was markets aren't higher because of growth. Markets are higher because of debt. And that debt has been fueled by low rates, by monetary ease. And so we are in a Fed bubble. And when the Federal Reserve raises rates, the bubble's going to pop. They're going to collapse the stock market. And that's exactly what happened. And it coincided with the first book, pub date. It was published on August 14th. And in Q4, the stock market dropped 19%. Bonds dropped dramatically as the Fed tightened and took money off the balance sheet.
And what year was this?
This is 2018. Yeah, this is the fourth quarter of 2018, and it's what began Donald Trump, attacking the Federal Reserve on a daily basis, because he had been promoting the stock market every day as this is, it became his calling card. And my producer and I did a documentary on the thing. We actually won a Telly Award for it. Well, funny story, 25 years in the entertainment business, I never got an award, and here I am, just a couple years into this business, and
finally get awarded for your talent.
Yeah, I got like this, and so, but Donald Trump was attacking the Fed for that very reason. Is these policies are headwinds for financial assets. So the first book was published at the same time this is happening, and it made me look like I had some sort of crystal ball. But it really wasn't that difficult to, see if it's what you're looking at. And what I track and what I show in the first book is that the Federal Reserve balance sheet and the stock market since 2008 have literally gone hand in glove. And so if the balance sheet goes down, it's pretty good expectations that the stock market would go down. And so when the Fed pivoted, when they stopped raising rates and when they stopped taking money off the balance sheet, I was right on top of it because this is what they promised everyone they were going to do. And the conclusion of that book was they're going to, collapse the markets, but they pivoted very quickly. And I think Donald Trump had a very big hand in that pivot because of his pressure. And then what happened is then they not only started cutting rates, then they started secretly adding to the balance sheet back. Something that they, has been called not QE, and the balance sheet, starting in August of 2019, started going up $50 billion a month. So for those reasons, I'm looking at the balance sheet saying, okay, I can look at financial assets through what the Fed does to the balance sheet, and that led to the Great Devaluation.
So let's talk about the Great Devaluation.
Okay.
First off, love the title, love the book. And again, what was unique about this book is that it was right on target before the pandemic, and the pandemic has really amplified and sped up a lot of what you talk about in the book. So walk me through the Great Devaluation, the case for it.
Sure. So because these things happened so quickly, we did a gold summit in August of 2019 on the 1-year anniversary of the book being published. And I called that presentation the Great Devaluation. And I laid out 10 chess moves to checkmate for the US dollar. See, what I was talking about is not linear, okay? It's something these are like chess moves. And when you're playing chess against a master, even though the game isn't over yet, when you make the wrong move, it's just a certain number of moves to checkmate. Right. And so that was the idea, is we just have a certain number of moves now to checkmate. And the Federal Reserve, as a tool in a recession, lowers interest rates 5%, 500 basis points. At the time, when they pivoted, they were at 2.25%. So the highest they could get them to is 2.25%. And then they stopped. And then they started cutting rates. And so the question I was asking was, well, okay, how do you take 5% from 2%? And the answer is a simple -3%, right? So it was that idea, okay, well, what does -3% really look like in real terms? Well, that means if you have $100,000 in the bank paying a -3%, that $100,000 is now going to be worth $97,000 in a year. Okay? So negative rates, which were happening, by the way, in Europe and other places, is something that is not sustainable long term because people will start to hoard. People will start to, why keep my money in the bank if I have to pay a fee? Okay? And that ties back to the history of gold and where gold fits with the dollar. And that presentation was seen by a big publisher, and they said, we'd like to turn this into a book. And so I found myself slaving away at the computer for 20 hours a day for 6 months. And to answer your question, then this pandemic happens, like the speed of this. Everything that I had talked about in the book, which was in the next recession, the Federal Reserve, it doesn't have any room to lower rates. So they'll immediately lower it to 0. And for every 1% away from 5%. So if it's 2, they'll drop to 0. And for every 1%, they'll need to print somewhere around $3 trillion. And that was based on some white papers that had been done from at the Federal Reserve and what types of policies they could enact in case these things would happen. And so when COVID happened, here we are. The Fed cuts interest rates. At the time, they were 1.25%, and they cut to 0.75%. And I saw it as, okay, this is the beginning. That was on March 3rd. By March 15th, they'd cut to zero. By June, they'd added $3 trillion to the balance sheet, and everything I was saying in the book was happening real time. And that was where it got kind of, a bit crazy for me, because the timeline between book submission and then book being in a store is like 5 months, 6 months. So I turned in the manuscript on February 14th, at a time when the stock market was literally at all-time highs. Donald Trump's ratings were at all-time highs. This is before pandemic. And in the course of 6 weeks, that all changed. And the book of, prophecy turned out to be a book of news.
Yes.
Right? So the publisher allowed me to rewrite the first chapter. I did that. And then we put addendums at the end of each chapter to say, what happens just a few weeks later, and how all of the things that I'd been talking about in the chapter were starting to play out and come true. So that's kind of the story of the book and how we got there.
So let's unpack some of this, because I always viewed gold as something that everybody should have a little bit of as a hedge.
Yep.
And I'm sure many other people have said it, but you're the person that convinced me that forget about it being a hedge. Gold is a good investment. Let's unpack some of your thinking on that.
So let's start with one idea, and that idea is we have choices of where to put our investment dollars. Okay, you can put it in stocks, you put it in bonds, you can put it in real estate, you can put it in commodities, you can put it in gold. So it's really, to me, relative. Okay, gold is gold good or bad, or stocks good or bad, or bonds good or bad? They all have their purpose at certain points in time. It's relative to what you could be doing, which is where it becomes interesting. And gold is a better way. Just highlighted one very simple fact, which is Wall Street tells us to own stocks and bonds, and yet gold has dramatically outperformed stocks and bonds over a very long period of time. And my summary on why that is in a growth environment, paper assets are what you want to own. In a debt environment, you want to own gold. Because ultimately, gold, and this is what most people really don't get, gold is simply a referendum on the US dollar. That's all it is. It's a referendum on our currencies. And so, if you think about it in that framework, 90 years ago, a $20 bill and one gold coin were the same. They were equal, okay? It was the value of gold. They were interchangeable, by the way. We were on a gold standard. So you could walk into a bar with a gold coin. You could walk in with a $20 bill and buy the whole bar drinks if you wanted. And they were the same, okay? By 1971, 1 ounce of gold was $42. By the year 2000, 1 ounce of gold was $250. Today, gold's somewhere around $2,000. So gold has gone up 100 times over the last 90 years relative to the dollar. And I believe you're going to see gold relative to the dollar rise to dramatically higher levels than this, and why I'm buying as much as I possibly can.
So that's interesting you bring that up. So first off, you talk about the massive increase in value in 90 years. Is it too late? I mean, is gold, should people wait for it to go back down?
Well, I have some big thoughts on that. Number one, I think gold is among its most undervalued in history right now. See, relative to the stock market, okay, there's a chart we could put up that has gold relative to the S&P 500. In 2011, it was 1.7x the S&P 500. I can't remember the exact numbers, but I think the S&P 500 was around 1,200 points, and gold was around $1,800. And so it was 1.7x to the S&P 500. Today, gold is about 0.55x the S&P 500. So relative to stocks, gold is dramatically undervalued from where it was just 9 years ago, okay? Keep in mind, relative to its own price, gold hit $1,925 an ounce 9 years ago. We're just back there now. So relative to its own price, it's not, it's just back where it was 9 years ago. But it gets even more interesting than that, because relative to treasuries, gold has never been a better opportunity. See, the big knock on gold is it doesn't pay a dividend, okay? That's why Warren Buffett and other, very smart, investment minds have said gold has no utility, doesn't pay a dividend, and therefore it's not something I want to own. And my argument in the first book was, yeah, but gold's up 5 times and the stock market's up 2 times. That sounds like something I want to own. But now, the real rate on the 10-year Treasury is negative 1%. So that's the real rate when you factor in inflation versus what the 10-year Treasury is giving you. It's a negative 1%. So gold, while doesn't pay a dividend, it doesn't cost you 1% to hold. And that's why you're seeing gold get a lot of new attention. I brought up Warren Buffett. Warren Buffett is someone who has set the mindset for investors for the last 30 years. He's been a big critic of gold for a long time. And frankly, as someone who is so passionate about gold and believes in gold, talks to people about gold, the one comment that would be thrown at me was Warren Buffett doesn't believe in gold. And so that's a pretty tough one to overcome. On the day that the Great Devaluation hit #1 on the Wall Street Journal, a friend of mine called me. And he said, how validating is it that your book is #1 on the Wall Street Journal? How validating is that for you? On that same day, Buffett had announced his new holdings, but for the first time I ever bought gold. And I said, it's not nearly as validating as the fact that Warren Buffett just bought gold. And to me, there's a lot to unpack there. There's a lot to think about when you're considering what's going on there. Well, Warren Buffett is a value investor. Okay, gold was $1,950 on the day that was announced. So he thinks at $1,950, gold's undervalued. I don't think he'd be taking a big position in gold if he thought gold was going to 1,000. Okay, so I think Warren Buffett thinks this is a very undervalued price. I think he's looking at some of the things I just mentioned. And why it's so important. See, my book could be #1 on the bestseller charts for 10 years. It wouldn't do for gold what that one move did. Remember, Warren Buffett is the champion of the passive index investing model, okay? In 2008, about 10% of the money in the market was in passive index funds. And he made a bet with protege partners, and his bet was, I bet the S&P 500, a low-cost index fund, will outperform any hedge fund manager over the next decade, and I'll bet any manager that wants $1 million for charity. And one hedge fund took it. It was protege partners. They got smoked, okay? And passive index investing became the rage. And Warren Buffett, remember, after the housing collapse, we were scared. Okay, there was blood in the streets. The stock market had come. No one was sure of what was coming next. And what did he do? He bailed out the banks. He bailed out AIG. He bought a railroad. He doubled down on America and said, hold America forever. And his certainty literally led the charge for the stock market over the last decade. And the passive index investing now accounts for over 50% of the market. And I think that mindset shift that he began a decade ago happened for a couple of very good reasons. And I talk about them in The Great Devaluation.
Well, let's talk about them now.
Okay.
I don't want people to have to read the book. Okay, we got you.
Let's do it. So interest rates being lowered to 0, okay, which was what the Federal Reserve was signaling, and for an extended period of time, didn't stimulate the economy originally, okay? Because even if interest rates, if money's free, I still have to pay it back. And if I'm a business owner or someone who wants to borrow money, I have to believe I can pay it back, or that it's worthwhile taking the loan. And so quantitative easing was created to help incentivize that action. And I think what Warren Buffett saw, which is exactly what happened, was, oh, this is going to be a boom for corporate America. Because if you remember, after 2008, people like you and me, or retail investors, weren't getting big loans. You had to have perfect credit and a lot more money than you were trying to borrow. And so all of that debt went to corporations. And what did they do? They borrowed for free. And rather than invest in CapEx and in new factories and hiring new people, they did something different. They bought back their stock. And as a CEO, this is a fantastic, deal, okay? Because buying back stock, can I explain that real quick, how easy that works? Let's say there's 4 of us that own a stock, okay? Let's say the stock's worth $250 each. Okay? The company's worth $1,000, all right? If I buy back one of those shares, you now have 3 shares sharing in a $1,000 company, and each of those shares have gone from $250 to $333. That's a simple explanation of how easy buying back your stock is. And so that's what created the stock buyback boom. The stock market exploded over the last decade, up 4x because of that. Some estimates say it accounts for more than 60% of the stock market gains over the last decade have been from this trick, which is really cool if you're the CEO. Because if you're the CEO, you get paid your bonus, your stock options, all happen on your share price. And so you get to buy back the stock, the share price goes higher, all the shareholders are happy, and your bonus goes from $3 million to $30 million? Hey, let's do more of that.
Yeah, I'm telling you, when I read this in your book, it was really frustrating to me. We just, a week or two ago, celebrated the 50th anniversary of a quote from Milton Friedman that has been criticized, questioned, but 50 years ago, Milton Friedman said that the only purpose of a company is to produce a profit for its shareholders. And so people criticize that, and now we have stakeholders. We want to do more for the community. We want to do more than just profit for the shareholders. And you can argue that point, but when I thought about that anniversary of that quote in the context of what I read in your book, the CEO is no longer having to worry about a profit for his shareholders. Instead of making better products, instead of becoming more efficient, instead of moving the ball forward, driving the real economy, if all I have to do is make a better market for my stock,
Right.
all I have to do is have less of my stock out there trading,
Right.
I don't even have to worry about. So you forget about the morality of Milton Friedman's, this is levels beyond that.
Yeah.
I was also surprised that when the loans were announced in the pandemic, that they were excluding companies saying you can't use this money to buy back your stock. I didn't realize how prevalent it was until I looked at the charts in your book and saw that lockstep with the increase in money.
Well, on that note, keep in mind the airline stocks after 2008, from 2008 to 2019, I think went up an average of 7 or 8x, okay? These are the guys who put 90-some% of every free cash flow went into buying back their stock. So this is what the airline CEOs did. And of course, if you're a stock market lover, it was great for you because the stocks went higher. So, there is a large portion of the world that's happy with this game, okay? But the problem is, and it's really, it can bring us back to Warren Buffett and what he's doing and how he's looking at the world. No one saves for a rainy day anymore. No one keeps cash in reserve. When interest rates are 0, you're not incentivized to. The Federal Reserve has created this environment. I blame them. I think it's going to be looked at someday as criminal what they did. And we'll get into the future because I really believe that that part of the discussion is something we want to focus on. But I was looking at when all of this happened and the markets dropped and COVID happened and the Fed came out with their extreme policies. What was Warren Buffett going to do? Because he'd been sitting with a couple $100 billion in cash, waiting. What's interesting, and this is where I really got aggressive personally on gold. Buffett in 1999 started taking his money out of the stock market. Buffett in 2007 started taking his money out of the stock market. He missed the last 15% of the dot-com boom. He missed the last 15% of the boom before housing. And of course, he missed the last 15% here because he's been putting money in cash since 2017. Why? Because Warren Buffett understands value. Okay? In fact, we talk about it in the book. I think we probably should talk about it here. There's an indicator, okay, a metric. It's actually become known as the Warren Buffett indicator. And it measures the total amount of money in the stock market relative to GDP. And what his conclusion is that any time the amount of money in the market is above 115% of GDP, the market is dramatically overvalued. Anytime it's below 75%, the market is dramatically undervalued. And that Warren Buffett indicator was something that he's personally said was his number one tool on how to think about investing. So in 1999, I think the Warren Buffett indicator hit 130%. He was out. It went as high as 150%, and then of course it collapsed. In 2007, it got as high as about 120%. He was out, and I think it hit its all-time high just weeks ago. It hit 173%.
Wow.
Yeah. So, when you're talking about value or price, you want to be careful to understand the distinction, okay? Is gold at its highest price ever? Yeah, it's at its highest price levels ever, but it's at its most undervalued relative to where everything else is, and that's why I'm buying as much as I can, Jeff. I'm so certain that when I show you the next two things, what it's relative to, it's going to become, the light bulb's going to go off. Because when you measure gold relative to the United States debt, and then when you see what's happened to our debt, let me just talk about that for a minute if I can. In the year 2000, we had about $3.5 trillion debt, national debt. We've gone from $3.5 trillion to now $27 trillion. Okay, that's a 8x, 8.5x. Okay, so that's our debt. The Dow Jones has gone up 2.5 times in the last 20 years. So our debt has gone up more than our stocks dramatically, number one, okay? It is a market that has been fueled by this debt. And why COVID is such a big deal is I think that most people prior to then didn't really know that the Federal Reserve controls the stock market. They didn't really know that the Federal Reserve was adding or subtracting the money supply and all of these things because it's dense. Okay, there's not a lot of people can explain it simply. I hope that's one of my talents. Is I'm a pretty good storyteller and I can see through it, and I think that's why people responded to the book. But when Powell, in response to the market collapse, lowers interest rates to zero and then adds $3 trillion to the balance sheet, he's now out naked in front of the world, showing you, because of course the stock market's exploded. And, now we all know that the Federal Reserve controls the market. And this has big implications.
I'm telling you, this was such a mystery as I watched even airline stocks, as they're talking about their potential bankruptcy, the airline stocks were going up. I'm looking at all these, in the midst of the pandemic, there was the initial crash, and then all of a sudden, I'm like, who is it that is buying all these stocks? And for a while, they blamed it on small new investors that weren't at home because they were home for, they weren't at work, so they were home from COVID, so I'm like, okay, these little guys that are not at work are not driving up the entire market.
Right.
It became so clear.
Well, the don't fight the Fed has become the investment mantra. Don't fight the Fed. The Federal Reserve announced they were going to start buying, not only going to start buying bonds, they're going to start buying junk bonds. Okay, now this is unheard of. See, my understanding of where we started with all of this, the Federal Reserve was created to be a lender of last resort. Okay? When you start front-running a recession and buying junk bonds, you now become the lender of first resort. And what happened is Wall Street's not dumb. I'm going to buy what the Fed buys. The Fed's buying bonds. Interest rates are going to go lower. We're going to buy bonds because interest rates are going to keep going lower. And it's really where we're at today. We're at 0%, and that's a problem because 0% sure looks like it's a ceiling or a floor, okay? You shouldn't be able to go below zero.
Yeah, it's hard to get your 5% correction.
Unless you start printing trillions and trillions of dollars, unless you start adding to the balance sheet massively. And a little story for you. The book was submitted on February 14th, and all of this starts to happen. And I called the publisher. I was like, I don't know what to do here. Can we move up the pub date? Like, can we race to get this thing out because it's all happening, right? But then I decided to do something because I had been, my readers know, my subscribers know, all I've been doing for the last few years is buying gold, Jeff. Every month, every investable dollar, our entire pension is in gold. We're the only company in the country that has our entire pension in physical gold. I personally buy physical gold, so I'm accumulating a lot of gold, and there's a reason. I'm not investing for today. I'm investing for where I expect gold to be down the road, 5, 7, 10 years from now, and I'm very certain of that price. And so I have a number I'm trying to get to as far as number of ounces, okay? But when COVID happened, I called a friend, and I said, I'm going to do something that I've said that's not who I am, but I'm going to get aggressive here with this situation. Powell just cut rates 50 basis points. This is before zero and adding to the balance sheet. I said, I know what's coming next. He's going to zero. And then he's going to print trillions of dollars, and gold's going to boom. And so I started selling some of my physical gold to get long some options, and I looked at it like an event trade, okay? Which what I mean by that is it has an end date, and looked at the calendar and said, when is the last Fed meeting before the election? That's what I wanted to see, because I figured that one's going to be a doozy, okay? And it turned out to be on my birthday. So it was a memorable date for me. And the things just aligned to the point where it's, okay, I now know what I'm going to do. I'm going to get down on these gold options. I call it Druckenmiller time. Do you know the story of Druckenmiller?
No.
This is a good story. So George Soros, is one of the largest investors of all time. Okay, his claim to fame was shorting the British pound and became a mega billionaire. And Druckenmiller is a young trader working for him. Stanley Druckenmiller now is one of the top investors in the world, a billionaire on his own, one of the smartest guys out there. But in his early days, he was working for George Soros. And he saw a trade that he just thought was a winner and started allocating capital to the trade. And the trade went against him. And he used it as an opportunity. He was so certain he was right, he kept getting more down on the trade, okay? Until he realized he had about 25% of the firm's capital in this one trade. And so he's got to sit down with George Soros and explain, what he's done. And so he sits down with Soros and he says, Mr. Soros, explains the situation and certain he's going to get fired. And Soros looks at him and says, what is wrong with you? Are you a moron? When you see a trade this good, you don't put 25%, you put 200%. And, the point of that story is I should have approached it like Soros. I kind of approached it like Druckenmiller. I got about 25% of my gold holdings out into this trade. And just like Druckenmiller's story, it worked out that way for me. Initially, it went down significantly. And this is what people need to recognize about gold, okay? See, gold moves based on where stocks go. So when people sell stocks, they're buying dollars. They're moving out of stocks in dollars, and the dollar index and the dollar rise. And the dollar index puts pressure on gold. So when you see volatility and the stocks, fall, typically, the dollar rises in the short term. of course, gold is a safe haven. And so investors ultimately move into gold in times of uncertainty. And so it's like this chameleon investment that's really misunderstood. So I don't believe in trading. I'm not a trader. I understand options really well. I understand the philosophy. And I know it's, picking up nickels and trading volatility and, moving in and out. And I'm more of a story guy. And I see a story, and I think I have a pretty good idea of where it's going to happen. But it's like when you see the future unfolding before your eyes, exactly what you thought was going to happen, well, then it's Druckenmiller time, man. Then it's time to get serious. And I told my friend, I said, this is going to be the trade that launches Brentwood Research. Because this trade is going to do that well, and I'm going to get out of it on this date. And I told him all about it before it happened. And I got about 250 ounces in. This is what I cashed out to get in. And last week when gold dropped below 1900, I bought 750 ounces, and I also bought a house and paid some taxes. So it was a nice trade for me.
That's so I'm shocked. I mean, I'm serious. I would have never guessed that you would liquidate physical gold to do, and I'm glad you didn't do the George Soros approach.
Yeah.
That's a little too.
The beauty about a trade like that, if you approach it like an event, okay, if you approach it with discipline and a date, it's interesting because on my birthday, keep in mind, I was able to by June, gold had moved so much higher. I got everything out and had doubled my money, and I was free rolling, with 7 figures. So that's a really nice place to be in. When you're free rolling with 7 figures, it's like, okay, I've already I've locked up some profit. Now I'm absolutely certain I'm sticking to this date. And I was, gold, I could have gotten out earlier and done better. But I also, that's really where the research is headed is I think there's a lot of events coming. I think there are a lot of big events that we can now think about and think through like chess moves. And as they occur, they're going to give you more value. Okay? So I think gold needs to be a major portion of everyone's portfolio, especially now. But I also believe that there's other places that you need to be, allocating funds. What I was doing for the last few years was just out of not knowing where else to put it. I think a whole new mindset is coming. That's, if you had to describe what the great devaluation is, I think it's a mindset shift. And it's really what I'm excited to teach people about and the certainty of that and why and how I know and why what I'm looking at.
Kevin Harrington is a household name. He is an entrepreneur like few others. He's created great wealth and abundance for decades now. And you wonder sometimes, are people sort of just lucky? Hey, they stumbled into something, they had good timing on something, and look at how their life turned out. Well, when you listen to Kevin, you realize luck had nothing to do with it. This man has such context and understanding when it comes to wealth development that I literally was on the edge of my seat as we were having the conversation. You can learn a lot from him. I know this because I certainly did. So enjoy this interview with Kevin Harrington. Well, Kevin, I've been anticipating this interview for a while. Obviously your reputation precedes you, so I'm really excited. Thanks for your time today.
Great to be here. Thank you.
So let's get back to your history. You've got your fingers in a lot of pies. You've got quite a background in the entrepreneurial world. How did this all get started?
I was fortunate to grow up in an entrepreneurial family, and actually I'm one of 6 kids. I'm number 4. So my father was a bartender, and he saved up enough money to open up his own bar, Harrington's Irish Pub. So at 11 years old, he's like, I know where you're going to be this afternoon after school. I said, where? Down at the pub. Okay, so my dad put me to work early. I literally worked a 40-hour week when I was 11 years old, after school and weekends. And so, but he would teach me the financial operations, the purchasing, and wasn't just, I was washing dishes and beer backing and serving tables and cleaning tables and everything that you do. In fact, I said, how do you become an assistant chef at the age of 11? Your father owns the place, the chef doesn't show up, and you're assisting your father cooking the food, right? So, because that happened quite a bit in small businesses, someone's not going to make it. But to make a long story short, my father came to me as I was getting into college, and in my senior year, and he said, "Look, bad news. That you're the fourth child. I don't have the money to put you through college, so you're going to have to pay your education, your tuition, your books, your living expenses, your car, your insurance, your everything, right? You get zero contribution from your dad." And so I said, well, I already had a business when I was in high school that I did during the summer. So it's because my dad, again, was mentoring me to be an entrepreneur, which was pretty cool. But now I had to be an entrepreneur year round. I couldn't just have a summer business.
Right.
If I had to pay, I had expenses every month. So, because I had moved out of the house and now I was living on my own. But so I started a heating and air conditioning business. And what I was doing was I was data mining, going to the courthouse and getting leads of new homeowner transactions. And so I actually called the people and I started the heating and air conditioning company, but I offered them, I said, I'm a dead startup from zero company in the heating and air conditioning business. But what I had were thousands of leads of people that just bought a house.
Was it just your instinct to go there and find those leads? I mean, you'd figure that people who are in that business would already have sort of a disposition to say, okay, how do I go market my business? You thought of something that probably other people didn't think of.
Exactly. I just always felt that I was trying to, I was like, how do you start from scratch without an existing business?
Right.
I got to get leads.
Right.
It's all about customer acquisition.
Right.
All my life, my focus has been customer acquisition. So, so I got these leads from people that just bought a new house. They had great credit. They put the biggest amount of money they may ever invest in something into their home generally. And I called and said, welcome to the neighborhood. We're going to come out and do something for you amazing. We're going to clean your furnace and give you a free safety check. Wow. No charge. And so we were picking up 20 new accounts a week. But most people would be, hey, what about, we would talk to them about an electronic air cleaner, a humidifier, air conditioning if they didn't have it, and a more efficient furnace, because in those days, there was something called a pilot light in most furnaces that burned 24/7, 365 days a year. We had the rights to sell a spark ignition furnace. And this saved you 20% of your heating bill right off the bat, just from putting it in. So we went from zero, and this is 1977 when we started this, when I started the company. Went from zero to $1 million my first year, which was pretty cool because in today's exchange, that'd be pretty close to about a $5 million business. $1 million a year in the 70s is about a $5 million a year today. So this is long before the internet, long before Amazon or Facebook or any of that kind of stuff. So it was really old school marketing, and it turned out to be the courthouse. But anyway, make a long story short, here I had a driveway sealing business in high school, a heating and air conditioning business then in college, and all of a sudden I had 25 employees, 6 trucks going out every day. Wow. I quit school.
I was going to say, did you finish college?
I had to quit school. So I dropped out to run the business because I would get to my company at 2 o'clock in the afternoon, and they opened at 7 a.m.
Right.
And all hell had broken loose in many cases, and it was costing me too much money not to be there, and plus I had to hire someone to be there while I wasn't there. So I sold it to one of my employees, and then I had a pile of capital as a young kid. And so I started looking to buy a business. And so I was meeting with these business brokers, and they had, some of them hundreds of companies for sale. Pizza parlors, delicatessens, flower shops, restaurants, import, export, manufacturing companies. And I'm sitting there in front of this broker one day, and he's got stacks and stacks of companies for sale. And he had the books and records. I'm looking at the books and records of these companies, and I'm seeing, what am I seeing? Percentages. I'm seeing food cost percentages, rent percentages, leases, lease agreements. I'm like, this is my college right here, is to look at the P&L statements of 200 companies that are for sale and why are they for sale? And then, whatever. I said, I want to do this. And that's what I did. I became a business broker to sell businesses to get the knowledge of the trends and what's going on inside all these companies. So that was 1980. I started a business brokerage company. And so now I'm sitting at the closing table. Somebody just bought a flower shop. Who's going to do your accounting? Oh, do you recommend somebody? Yeah, call this guy. Who's going to do your legal? You may want to be a corporation. Who do you recommend? Call this lawyer. What about insurance? So I'm giving them all these names, and now the lawyer's got 20 new accounts. The insurance agent wrote 20 new policies, 30, whatever the number was. And I said, wait a minute, I want to bring all of this in-house. And so I leased the whole floor of a downtown office building in Cincinnati, Ohio. And then I put the business brokerage in the center of it, and I've rented space around it to an accountant, to a lawyer, to an advertising agency, to graphic people, to all the support people to be able to provide services to these small business owners. And I called it the Small Business Center. Come to the Small Business Center. We can sell you a business. We can help you build your business. We can do your accounting, your books, your legal, your this, your that. And it was a synergistic business that worked together. And it took off. It was amazing. And Entrepreneur Magazine heard about it. They did a story on me in the process, and I got 800 phone calls from all over the world. So then Entrepreneur said, I got kind of friendly with the guys at Entrepreneur, and they said, we are Entrepreneur. You're dealing with all these entrepreneurs. Why don't we license this to other people, and almost like a franchise, right? So that's what we did. We opened 30 small business centers across the United States in partnership with Entrepreneur Magazine. And now this was I call it my pre-Shark days, because I was taking equity in deals and I was, helping people out. I'd sell a business to somebody. They were struggling because they didn't know what to do. And I'd come in and help them out a little bit, get them someone to run it. Maybe someone bought something for a wife and now she doesn't want to work. Or she didn't realize it's going to be an 80-hour week in the mall, right? So the husband said, hey, my wife would love to buy a business, but buying a business and running it, it's two separate things, and it can be very, very time consuming. So make a long story short, this was back in the early 80s now. It kind of takes me through high school, college, owned a couple businesses, sold it, and then started the Small Business Center. We opened 30 of these around the country. So here we were helping entrepreneurs become more successful.
What's interesting is I'm seeing like a little bit of a pattern form. Like Freud once said, it seems to be my fate to discover the obvious. It's like, okay, you're starting this heating business, heating and air conditioning. The obvious place to go for leads was where you went, but other people weren't seeing the obvious necessarily.
Right.
In this case now, hey, there's a bunch of people buying small businesses, usually local businesses. They need all the support, so of course it makes perfect sense. Build a support center around them. This is great win-win for the people who are purchasing the business. Probably increases their probability of success a great deal.
Yes.
And at the same time, now you've got a business in supplying these services. Everybody wins. So you seem to have this pattern of saying, there's a need here. I can observe it. It's an opportunity, and then you take advantage of this. So
exactly.
Where did it go from there?
So now at 14 employees that were, I say employees, they were really straight commission salespeople.
Right.
And I don't remember the legal definition of what they did, but they were basically commission folks. And so, I was going to a lot of trade shows, and because if I'm selling restaurants, I'm going to tune into that industry. Flowers shops, I got to tune into that industry. I got a home and garden store for sale. I'm going to the home and garden shows. So I was doing about 25 to 30 trade shows a year, which I think even to this day I still do about 20. And so now I'm getting across all these different trade shows, and at the same time, the world of television was something I started to tune into, because here it was the early 80s, and I bought it. I had been successful, so I bought a home, and I remember ordering cable television. When cable TV first came to be in my town, Cincinnati. It was the early 80s. They said, okay, now there's going to be 30 channels in your that you can subscribe to. Until then, if you remember TV before cable, it was only like 4 or 5 channels.
Right.
ABC, CBS, NBC. You pretty much just got a couple channels. All of a sudden, I got 30 channels. And so I remember getting my cable installed, and I got 24 hours of movies, HBO, 24 hours of news, CNN, 24 hours of music, MTV. I get to channel 30, and I'm going through each channel. I'm loving this. 24 hours of sports, ESPN, right? I get to channel 30, and there's nothing there. And so it was just colored bars. And so I called the cable company up, and I said, hey, I don't know what's happening. I said, I really love this cable thing, but I'm only getting 29 of the 30 channels. There's nothing on channel 30. And they said, oh, that's Discovery Channel. It's only an 18-hour-a-day channel. 18 hours of programming, 6 hours of bars on the screen. And I said, well, why is that? They said, it's a new channel. They don't have a budget to produce 24 hours a day. We, as the cable operator, are going to deliver to you what they deliver to us. So here I am thinking, what can go in that 6-hour block? And this was now where the thinking started. So I said to myself, I have to put something in the 6 hours that can generate revenue for me and for the cable operator, because it's got to be a win-win situation. And in business, I learned if it's just for you, it's not going to last very long.
Right.
So I had to think, what's going to work for them and for me? So here I was at the Philadelphia Home Show, Home and Garden, research, right? And I remember there was one booth with this one guy, and there was this huge crowd around the booth. And when you go to a trade show and you see a crowd around a booth, what do you usually do? You kind of slow up, kind of look, see what's going on, right? And I could barely see what was happening, but this guy is sitting there, he's got a big table, and a knife in his hand. He's cutting through a Coca-Cola can, through a muffler, through a pair of sneakers, and he said, it's called the Ginsu knife. And so, and like that, this guy is selling thousands of dollars worth of Ginsu knives, and I'm watching him. And I'm trying to fight through the crowd to get up to talk to him when he's done. Before I got there, he started all over again, same pitch, and as he had collected money from the last round, but it was the exact same pitch, the same words, cut through the Coca-Cola can, through the muffler, through the pair of sneakers, and I'm like, wow, this guy's been doing this for a while. So finally he got on break. I went up, I introduced myself to him, and I said, hey, I'm an entrepreneur, Kevin Harrington. That's probably the best sales pitch I've ever seen in my life. Tell me about, how you got involved in all of this. And he's like, he said, well, my name's Arnold Morris. He said, but kid, he said, you think this is glamorous? He said, I do this 40 weeks a year, the same pitch. I'm here in Philadelphia for 6 days. I'm leaving tomorrow. I go to the Iowa State Fair. I'll be there 8 days. I'm away from my family all the time. Yes, I make good money because I saw him collecting thousands of dollars. He said, but it's really grueling, and he was in his 70s, wow. Arnold, okay? So that's when the light bulb went off. And I said, Arnold, I have an idea. I said, I don't know if you know anything about Discovery Channel. And he's like, what's Discovery Channel, right? I said, well, it's a channel that's 18 hours a day, 6 hours of nothing. I want to do this. Let's cut a deal. I want to film your presentation. I want to take it down to Discovery, give them a percentage of sales, and I just need to know you and I can put this deal together. And he said, look, if this will get me off the street, off out of having to come to the fairs and the home shows, I'm all in. So that's what we did. We filmed. I had never filmed anything before. Right. I mean, I was not a videographer. So I said to Arnold, let's do it. We shook hands, signed a deal, and so Arnold said, look, why don't we just do it right? He lived in New Jersey. He said, there's a grocery store, closes at 8 p.m. I know the manager because I need to be around vegetables and because we're going to be cutting through a lot of stuff. So we shot it at the King Supermarket in New Jersey, right? The infomercial, right? So we put it up on Discovery and it just went, phew, it just took off like crazy. And this was just local, Cincinnati. So then I said, I got to go to the National Discovery Channel. I went to the National Channel, signed a contract for a multi-year contract for all 6 hours nationwide. Wow. So when I was sitting with them, I said, I want the whole 6-hour block. They said, oh, well, you know, how much you willing to pay for it? And I said, look, you know, I'll give you $1,000 a day. And so, for 6 hours. And we ended up getting it done. So at that deal. And so I'm like, in the very beginning, 3 a.m. to 5 a.m. wasn't very powerful, but as we got to 6 a.m. to 9, it was 3A to 9A was the 6-hour block, okay? As we got to like 6A, 7A, 7 a.m. to 9 a.m., we had Saturdays and Sundays. This time, we could do a whole lot of our sales on a couple of hours in the day or the week. But this thing, by the third year, that block of time was generating $28 million in sales.
Wow.
For a $365,000 media cost. So we were making money. And then we were doing Arnold. Then Arnold got smart. He said, hey, look, were you at the Philadelphia Home Show? Did you meet any of the other guys like me that had products? Because he was just one stand. And I said, I really didn't. I said, what are you thinking? He said, well, hey, I'd like to introduce you to all the other product guys. He says, but look, give me an agreement that you're going to give me a royalty on anything you do with Billy Mays, with John Parkin, with Sandy Mason, with Wally Nash.
So all these guys were at the basically dog and pony shows, like demonstrating.
All pitch people,
and they were great pitch people, right?
They spent their entire life learning how to pitch something, and they were the best at that particular product.
And so basically, you took them out of that circuit, put them on TV,
exactly,
to create scale and leverage. Yeah.
Exactly. We started with Arnold, and before we knew it, we had 25 infomercials, a lot of it in the kitchen. We were doing knives, we were doing blenders, we were doing mixers. Wally Nash said, I've got this hand-hammered Chinese wok that's hand-pounded, and they make them over in China. It's got the original pounding marks from it so that it can hold the meats and vegetables up and things as you're cooking, keep them warm, and you're hand pounding it. And so we did 4 million woks at over $50 a piece.
Wow.
So $200 million in Chinese, hand-hammered Chinese woks. What do we call it? The Great Wok of China, okay? And so, and it's so amazing because, I mean, now, we did that in 1988, by the way. Hundreds of millions of dollars. What are we bringing maybe back to the marketplace just recently? QVC came to us and said, can you bring us some of those old products you had from the old days? So we're actually now going to be bringing the hand-hammered Chinese wok back potentially, right? So, but that was Arnold knew all these people. He was like their friend. And they're like, Arnold, you don't have to work anymore? He's like, I'm getting millions of dollars in the mail for not just doing my presentation one time. I mean, that's how an infomercial works. You shoot it once. I mean, Chuck Norris did the Total Gym 20-some years ago. It still runs, the same one. I mean,
wow.
And he's made tens of millions of dollars, by the way.
So let me ask you this. So there's no doubt that your timing, so I want to get kind of your philosophy on this. No doubt that your timing and being at that home show, seeing this guy, having cable just come in, and you kind of put 2 and 2 together.
Yes.
And we know a certain amount of success is just timing, but there's also this element of, I think no matter what was going on in any time, you're going to see opportunity. So is this something that is like a teachable skill, or is this something you're born with, some combination of both? How do you see all this?
So what was interesting is once we ended up opening the infomercial business, we decided that, okay, we need to go to a lot of trade shows. This is where I found Arnold, right? And so we started, so we hired a few people, and we started with a small staff. And so I'll never forget the very first trade show we went was at the Jacob Javits Center in New York. I had my new team of, so we're running infomercials. And I got my new team, and I take them all up to the show, and I just said, okay, let's all hit the show. You start over there, you start over there, I'll start here. Let's meet in 2 hours. And so now I'm walking the show, and I'm finding products. They're walking the show when we meet. I said, what'd you find? Oh, nothing. There's nothing here. This is a waste of time. My guys are telling me. And I'm like, well, I found this and I found that. And I'm like, well, what so I hadn't taught them how to do a trade show, right? So I said, okay, look, there's product here. You can't you're not going to just see it because sometimes the best products are actually under, behind the curtain because they're not necessarily showing you the hottest, latest, greatest thing at the show. So what I taught my folks how to do is walk to the booth. Don't talk to somebody that's like a local hired person that knows nothing about the company. Get to the CEO of the company if you can. If it's a huge company, you may not. But if it's a 10-foot by 10-foot booth, the owner's probably standing there, right? And what you're going to tell them is you have developed this new industry. You're part of this new as seen on TV industry where we take products, we select products, we create this amazing selling message around it called an infomercial. And in the beginning, they weren't even called infomercials. But and we have success now where we're selling millions of pieces. And what do you have in this booth that might be applicable for my business? And now I took my team with me and we got, I got something I've been working on for, let me show you. We walked out of that show with several deals. So yes, there is a way to hit a trade show. It's not just walking it and thinking that product's just going to smack you.
Right.
Although I will say this, at the Chicago Houseware Show, my father, who was my original mentor, he's like seeing me do all these things. And he's like, wow, he says, I maybe could go to some of these shows and see if I can find some stuff. Well, he ran into a guy that was slicing something with a product called the V slicer. And most slicers had a blade that went across, but when you put a tomato through it, as the blade went across, it kind of slid the tomato off to the side. A V-shaped blade kept it in the middle, and you could work it much faster. It was a German-made product. And so my dad met the V-slicer people and said, what do you think? We went straight from the Chicago Houseware Show back to Philadelphia, where I was living at the time, shot the infomercial, and that went on to sell over 10 million V-slicers at $35 a piece. So that did over $350 million. And that was something that my father brought me. And by the way, I paid him royalty checks for bringing me the deal. So, because that was something that I always protected. You bring me a deal, we're going to sign a contract and give you a piece of the action. And so we started making many, many millionaires. I mean, we weren't just making Arnold a millionaire, but the people that would introduce us to the next Arnold, or the people that would, in the case of Arnold, he introduced me to Billy, so he was making money and he had multiple streams of income beyond his own products.
So this, I think, innovated a lot of the TV things like QVC, HSN, because I know that there's people there also who bring deals to them and get a royalty on it. So
Absolutely.
I guess you kind of like developed that whole model, from the early days
Yes.
as far as how this works. Because if you have people out there searching and recruiting, again, that's leverage because there's only so many places you can be to try to find products.
Exactly.
So now so obviously this whole industry blew up, and still to this day, as you said, there's infomercials that run for decades. And
they've been running for decades.
Still produce, which is mind-boggling to me because I don't know really any other medium that has products that can make that claim. At least nothing comes to mind. So it's amazing that it works on TV this way.
Yeah, I mean, the beauty of what an infomercial is, because it's important to understand, the spot business existed before me, 1 minute spots. And they would sell, like Ron Popeil, was the pocket fisherman.
I remember.
And $20 for this little fishing device. And he had the Chop-O-Matic, and he had Mr. Microphone. These were 1-minute spots selling $20 products that cost $2 to $3 to manufacture. Okay, that's business existed. I came along and said, I got 6 hours to fill. I can't fill 6 hours with 1-minute spots. Let's sell $300 products. Let's sell the Gazelle for $300 or $400. Let's sell, the Chinese wok was $40, but we were selling a hand blender for $99, but we had 30 minutes to sell it.
Right.
So we created this industry. We created 3 10-minute pods in a 30-minute show. Each pod had a CTA at the end of it, a call to action.
Right.
So you did a 10-minute, it was actually a little less than 10 minutes because at the end, a 30-minute infomercial was actually 28 minutes and 30 seconds because we had to give 1.5 minutes back to the station. So in 28:30, we had sort of 3 9-minute plus pods. And they were 9 minutes, including a call to action at the end, so that you could actually come in at any point during the 30-minute show, and some of what was in the first pod would be repeated in the second pod with some new stuff.
Did you start it? Yeah, so you figured all that out before you even ran the first infomercial that you...
Well, as we were doing the infomercials, because what happened was this. Arnold, he said, look, I have an 18-minute version of my Ginsu pitch, but I also have an 8-minute version. Which do you want? I said, well, we got 30 minutes. I said, do you have a 30-minute version? He said, man, I can't go 30 minutes from this thing. So the original show was only 26 minutes long because we just, we ran the CT. He went 18 minutes and we ran the show with 3 2-minute CTAs on the back of it, and we couldn't get it past 26 minutes. So it was what it was. But we've learned more about production. Oh, let's go shoot some testimonials and let's fill it with some other stuff, right? I mean, if they're giving you 28 minutes and 30 seconds, you might as well use all 28, 30. Of course, we owned the whole 6-hour block, so that was a little different because we could just program that. So what we would do is, if we had a 26-minute long show, we just put some short form commercials on the back end of it. But yes, we learned that some products, I mean, when you think about it, you can pretty much understand certain products pretty quickly.
Yeah.
You don't really need 30 minutes to understand them, but I can, if I can create the selling message in less than 10 minutes, let's reboot it 3 times, but you also freshen it with some, you don't use the exact same footage, but it's a similar style selling message in the other pods.
Yeah, well, the thing that, again, the consideration or the foresight saying, people are going to join not at the minute it starts, and that they're coming in at different times. So you have all these considerations for when an audience member might start viewing and what you have to take them through and how to keep them interested, et cetera.
Exactly.
And I've always found, that infomercials are compelling. In other words, it's like, it's like watching a show, except that you're really being sold something, but the story, so I have to imagine also having people who are used to giving pitches, over and over again live, that those are the right people to get on camera and to present the product.
Yeah, so exactly. That's why Billy Mays, because these were people that honed their pitch at the fairs and the home shows, and
they know how an audience responds to them.
So as they're delivering the pitch the first time, people are asking questions, and they're realizing, oh, I didn't cover that? Okay. Now they incorporate the answer to that question into their next pitch.
Right.
And so this is how, on the shopping channels, people like Tony Little, and we would put him on, maybe didn't work the first time. Well, that's okay, because they're going to give us 4 airings on a product for Tony. The very first time, it may not do so well, but we have various case studies of products that actually had a 10x sales increase by the time we did the 4th appearance.
So speak to that for a second, because this is, I think, a critical lesson in marketing.
Yes.
Right? Same product. Because a lot of times, many business entrepreneurs, or one version of them, are product developers, right?
Yeah.
They've got an idea, usually a passion around the idea. It's like, I've got a breakthrough innovation for exercise, like you're talking about Tony Little, right?
Yeah.
So you got the same product.
Yeah.
The same person pitching
the product.
Yeah. But you need a certain amount of feedback. So it's not just the product, it's not just the pitch person, but the feedback saying, okay, this was missing, we add this, and to have a 10x increase. It's not like, oh, we incrementally went from 10 or 15% more.
Right.
A tenfold increase in sales.
Yeah.
So speak to the importance of getting the copy or the communication down from a marketing perspective.
Yeah, so I'll give you a good case study with Tony Little. When Tony Little first came to me with the Gazelle, it was the walking on air Gazelle, right? In fact, you see it in today's national car rental commercials.
Right.
I don't know if you've seen that.
I've seen it.
Tony's going across the stage.
Yeah.
That's our product for for 15 years. And so when I first met Tony, I said, "Wow, this is very expensive, though. It's this is going to be $400 to $500." So we said, "Okay, well let's put it on HSN. Let's test it." So the very first time, Tony goes on himself with the host and is selling a $500 Gazelle. It bombed. And we're like, oh, wow, this was not so good. But they gave us 4 airings.
Right.
So here we are. Tony just went on live. He got his 10 or 20 minutes, and it didn't do well. So now we come back. Now let's watch this. Okay, but Tony, you're a fitness guy. You're in great shape. You're selling a $500 product that you use. But we're talking to Middle America here, and people that want to lose weight, yes, but you're not connecting with them. So what do we need to do? Oh, let's get some people on set using the product also. Young, old, open it up so that we can now see this isn't just for fitness gurus like Tony. Anybody can jump on this. So as we progressed from the first to the second to the third to the fourth airing, we added little things each time, and the sales were like doubling, okay? So we put more people on, and we put seniors on, we put women on, we put young people on. Then we added music for fun. So now they were doing this, having fun with all different age groups on set, and it just blew huge numbers by the 4th time.
Wow.
That was the 10X. So now we had a winner that we can now, so HSN was ordering big quantities from there. Then we said, let's go do the infomercial. Right. So we used the shopping channels to actually figure out our pitch, hone the pitch, and only work on the ones that really worked successfully on a shopping channel. That was our model in the very beginning, is taking products that had already tested somewhere. They tested at a trade show. They tested on a catalog. They tested on a shopping channel. Where did they already test successfully so that we know there's proof of concept?
It's interesting. I don't remember his name off the top of my head, but for one of my masterminds, I invited a guy to come speak who wrote a book, Life's a Pitch.
Okay.
And really, and this is the thing to understand, is that so often I think entrepreneurial failure will come from people who they have the personal passion for the product.
Yes.
There is a need and demand, but they don't know how to refine a pitch. And what you just walked through, because you say it so naturally, you almost make it seem easy, but I happen to know this isn't easy. It really isn't, as far as saying, what do we need? Oh, let's get them to visualize, different people with their, like you said, females, older, younger, overweight, what have you.
Right.
But then you also had a second thing, and this is a big deal, saying, let's add music and make it fun.
Yes.
So people can say, I can do this and it would be fun. Now it makes sense. It's the same product, the same pinch, man. These things, and like you said, it's a difference between failure. Like you said, use the word bombed, right?
Right.
And then a 10x sales. So
it's absolutely. And we also, on the shopping channels, we'd start getting call-ins. Yeah. And as people were asking their questions, now we're formulating the answers, but we're now incorporating the answers to those questions into the next pitch. So we would really use the shopping channels as a proving grounds, a testing grounds, and we could do price testing. We could do the real advantage you had as a shopping channel is that we would get a call in and somebody would say, oh, someone that bought it. So now next time Tony's on, if you bought a Gazelle, call the line and tell us what you've experienced.
Right.
And now when you get the call-ins coming in, you'd see, the spike in phone calls. So what we would track is where did we get the spikes in phone calls through this 20-minute presentation. In 3 minutes and 11 seconds in, we got a bunch of phone calls. What did Tony say at that particular moment? We'd go back and track the performance of the calls coming in against the creative and see how do we create this amazing pitch. So we used the shopping channels to price test, to creatively test the approach for the pitch.
So how important to product success are testimonials? Are they something that are not paid attention enough to for most business owners, or how do you see it?
I think there's certain kinds of products where testimonials are key. Beauty products, weight loss products, where there's, if there's a magical transformation capability, testimonials are great because think of Proactive, the skincare product. That's an acne product. You can show somebody with severe acne, and now 6 weeks later, clear skin. That's what makes that product work on TV. It's the magical transformation of that testimonial. So this is why with Tony Little, for example, we said, okay, the fact that you use it is great, but we need to get the mass market using this, having fun with it, and talking about it, right? So that's where testimonials became also kind of critical. But then we could fast forward and get weight loss testimonials from people that had used it and lost weight and got in shape. So I think in the infomercial world, testimonials are important. In today's world of digital, where things are a little shorter now, having testimonials is still important, but you also don't have as much time. So you don't get 30 minutes on Facebook to necessarily talk about a product. You might get 60 seconds. So I think the fact that you can have testimonials is a positive, obviously, and also celebrity testimonials can be even better because I say there's a bunch of different kinds of testimonials. There's user testimonials. There's professional testimonials, which would be maybe a doctor or a lawyer. There's celebrity testimonials. Then editorial testimonial is a newspaper, a magazine, or a trade journal writing about your product, which is always good because what does the industry think about you, right?
And you had that in the beginning with Entrepreneur Magazine way back when, right?
Exactly,
yeah.
Right. So here we were with Arnold Morris and Billy Mays and all these amazing kitchen products. So Homeworld Magazine was the publication that wrote about that industry. The CEO of Homeworld Magazine, also the editor, started doing stories about our products. And these were very positive stories because he wants to talk positively about his industry of home furnishings, right? And so I'll never forget an amazing marketing campaign that we created when we had launched a product called the Jetstream oven. And this was a convection oven on steroids. It went 4 times the speed of a convection oven, but it was infrared technology. So it could literally cook things almost as fast as a microwave, but it would brown and crisp the products instead of wilting them like a microwave would, right? I mean, you couldn't take you can't take a piece of chicken out of the refrigerator, put it in a microwave for 2 minutes and expect that it's going to be cooked properly. It's going to be soggy and nasty.
Yeah, you're a great pitch man yourself. You're making me want these products as you describe them. Good.
So the Jetstream oven we launched in 1991 at the Chicago Houseware Show. Now I said, I've got 100,000 people that have come from literally 100 countries from around the world. And what are they there for? This is the trade. They're there for the newest, latest, hottest products. So all these people are staying in Chicago. They all have to do one thing, check into a hotel. I found that SpectraVision was the company that provided all of the television to 90+% of the hotels in Chicago. So I went to SpectraVision and cut a deal to buy one channel that in all of the hotels. And that channel, what we did was we put the Jetstream oven on 24 hours a day. And we interviewed the CEO of Homeworld magazine, and he said, this is going to be one of the top products at the show, and you can see it at booth number XXX. And so when you checked into your hotel room and you turned your TV on, the Jetstream oven infomercial auto played.
Wow.
And then as people were watching it, then it told you what booth to go to. And so everybody at the show was like, I don't know, I'm seeing that Jetstream everywhere. Well, it's because it was in their hotel room and they couldn't turn their TV on without seeing it. But this thing kicked off in an amazing, I got to the show the next day, there was 250 people in line to get into the booth of the Jetstream oven. And we went from zero to $100 million within 12 months, and ended up, that product became a huge grand slam.
So that's like, again, pure genius. I mean, again, I'm seeing this pattern, going to see who the new home buyers were way back when in your college business, saying, okay, where are they going to be? Well, they're all got to be in a hotel. It seems obvious, but nobody knows thinking of this thing. I'm going to get the channel. It's going to default to the channel when they turn on the TV. And that's how you go from maybe a great product that some people know about to $100 million in sales in the business.
For $3,000 a day to SpectraVision for 3 days, for $9,000, I had a 24-hour channel that broadcast to every attendee of that show, and it became the hit of the talk of the show, and it was amazing.
Wow. I feel like I could talk about this all day. So you are doing a bunch of ventures that aren't necessarily like TV or infomercial based also. So what other businesses did you get into, and how did you get into those?
So what happened is, as an entrepreneur, I'm off building these different businesses, and we had more than 20 products that exceeded $100 million in sales individually. So that was pretty cool. I mean, some did $1 billion, some did $500 million, some did $250 million. We were doing we did kitchen products, we did hardware products, we were doing beauty products, we were doing, fitness and golf. The very first golf infomercial was the Medicus Golf Club. I don't know if you've ever seen that, but it flops and you can't complete your swing. Davis Love. So again, I used to go to 20, 30 trade shows a year. I love the golf show because I love to play a little golf. So I'm like, let's go check out the golf show. And Davis Love is there, and he's swinging his club, and it's flopping. And he's like, oh, if you don't have a good swing, it flops in the middle of your swing because you're not grooving it properly. You're yanking it up too fast. If you groove it properly, you can complete the swing and finish your shot. Anyway, so we were doing infomercials in pretty much every category: toys, golf, fishing. The very first fishing infomercial we did was called the Flying Lure. So now what happened is, we said we need to raise some capital, because when you're doing in the old days, and this is something a lot of people say, how did you do this? We didn't have the money in the beginning, so we would run the shows and we would say, we're going to ship this to you in 6 to 8 weeks. I don't know if you remember seeing on TV 6 to 8 week delivery, right? Now, can you imagine ordering from Amazon today and Amazon telling you, oh, we'll get it to you in 8 weeks, right? You're not in business if you're shipping in 8 weeks. But we had to do it because we had to get the order and then go make the product.
Right.
I mean, literally. And so we needed capital. And a public company came along and they said, hey, we've got a little pubco, we got lines of credit. If we acquire your entity, you can run the company, but we'll give you the lines of credit, you get a bunch of stock, and now you'll have capital. So now I started getting into some financial markets because, and this is now the early 90s was my first experience with running a public company. Turned out to actually we ended up on the New York Stock Exchange. Was pretty cool. So I had, in 1991, I started doing public company kinds of things. And at that particular time, I was on the board. I was the second largest shareholder of the company. We took a company from $1 a share to over $20 a share. We had 25 million shares. So at one time it was worth, 20 million. Now it's worth 500 million. And that was just over a couple of years. And by the way, what I saw as an investor owning the stock, that, if I had been running the company personally, I'm plugging lots of money into it, and I'm not necessarily making tens of millions of dollars, in my pocket because I'm having to invest and maybe somewhere down the line sell the company to get my money. Whereas in a Pubco situation, I own the stock. I mean, the stock, I'd come in the morning, one day the stock is $5. The end of the day, it's $8. Well, I got millions of shares. I just made $6, $8, $10 million in one day. It's like, I found myself now saying, okay, do I want to sell $29 gadgets, or do I want to be involved with public companies that can create tens of millions of dollars in value in a day?
And that's one of the things I think that a lot of people don't appreciate about owning a private company is exactly what you said.
Yeah.
It's there's a certain amount maybe of profit that you're showing, in your P&Ls, but you've got to fund the company, continue to funding the operation, continue to fund the expansion of the company, et cetera. So your real payoff is one day if the company exits, if you sell it.
Exactly.
Whereas you're saying the public company now, if you have credit vehicles available, you got stock, it's liquid, you can I want to buy a new house, maybe sell some of my stock.
Exactly.
It gives you a lot more flexibility and
Yes.
leverage, I guess, in growing.
Yeah, because it's like the other thing, because we ended up getting some lines of credit and things, like I mentioned, but the banks, you also have to keep certain ratios. You also, you can't be just distributing to yourself.
Right.
Let's take $2 million and put it in my pocket today.
Fiduciary responsibility to shareholders.
I want to go do this, I want to go do that, right? Well, the reality is that, it is a private, if you're a public company, you really have, you got to be careful what you do. But as a private company, if you're dealing with banks, they're going to restrict you from doing a lot of stuff that you might want to do, meaning taking cash out of the company, right? So, I think at the end of the day, you always kind of have somebody that you got to be keeping your eye on. If it's a private company and you got all the capital in the world and there's no banks involved, you do whatever you want.
Right.
But many times you got some financing institutions helping you with lines of credit, different things. Because we're selling to QVC, we're selling to Walmart, we're selling to Target. How do you finance all of that? Well, you can get a purchase order, and it's a bankable instrument in many cases. So, but they're not going to loan you the money if you're grabbing millions of dollars out the back door, right? So, but public companies this is what I started seeing as a very significant opportunity, and this started in the early 90s.
And that's the difference between, for lack of a better term, a lifestyle business versus a real business. Lifestyle business, cash flows really well. You live a good lifestyle, pulling the cash out all the time. A real business is where you're putting the value back into the business and growing it that way. And your payout it's delayed gratification. The big payouts will come later when you sell or go public.
Yeah, I mean, I had tens of millions of dollars in liquid stock that I was allowed to sell as long as we weren't in any kind of a quiet period. But I would never have accumulated that running a private company in terms of taking distributions type of thing, right? So, so public was something that really was very attractive to me because, raising capital with a public company, you issue stock. Okay, so it's like being able to almost print your own money if you can issue stock to enough people to get enough capital to behind the public company.
So we talked earlier because of my background. You were involved in a chiropractic franchising business.
Yes,
that, was very exciting. I guess you have some other businesses that are non-related to infomercials and TV sales. But you're also now you've got this accumulated wisdom that you for decades of experience, and you're putting out a newsletter.
Yes.
So tell me about that.
So what happened is companies would start coming to me and say, I know you do a lot of product stuff, but I need some great business advice. And one of the things that I have not mentioned yet, but in 1987, I was hanging around with some cool entrepreneurs, Michael Dell from Dell Computers, Ted Leonsis, who was the #2 guy at AOL, and Ted's a billionaire, Dell was a billionaire, but they weren't at that time. I was a young entrepreneur. They were both. Dell was working out of his dorm room making computers, and Ted was just doing software. But we said, hey, let's get an organization for young entrepreneurs, and we launched the Young Entrepreneurs Organization. It's called YEO, and we said, we each put some money into an account, launched it. It was nonprofit, and we said you can't be older than 40 because we were like in our 20s, right? So as we got older, we're like, wait a minute, this young part is kind of playing against us because we're now getting close to 40 and we're not even going to be a member. So we took off the 40. We said you can be 50 and let's take off the Y, and it's now called EO. It's the world's largest entrepreneurial organization. We're in 155 cities and more than 50 countries. And EO is very powerful. I'm the co-founder with a number of other folks, and so now I was speaking. I launched EO in Shanghai, and I launched EO in London. I launched EO in Latin America. As I'm going around the world, not everybody's in the product business, but they're like, hey, I'm an entrepreneur. I need some help. Would you be an advisor to me? So I started mentoring, and really, to be honest with you, in the beginning, I mentored for free because I was just helping friends. And this was part of the whole concept of EO was join the club, so to speak. Now you get a local chapter, but there's national meetings and things, and you're going to get some great advice from like-minded people. And so in the beginning days, it was, and my wife used to say, why do you do all of this for free? You're helping this guy, and you're helping that guy, and you're helping this guy. And I said, well, that's just part of the camaraderie of what we've created, but maybe someday I'll monetize this, okay? So today I just don't have the time to do it all for free. So now people come to me and they want some help. A buddy of mine called me. He worked for me for a number of years back in the mid 90s. And he said, hey, I just got involved with a beverage company. And the gentleman's name was Jerry David. And Jerry, he said, we have this little beverage company. It's a product called Celsius. And the stock's 10 cents a share. It's a pink sheet. We don't really have any money. Would you help us out? Could you take a look at what we're doing? And so I went down. They're down in Boca. Took a look. And he says, you know what? Why don't you just join our board? We'll give you some stock. We'll do this. We'll do that. And I said, okay, great. Let's do it. Now, this isn't an as seen on TV product. This is a drink. It's an energy drink that's healthy. And so I joined the board, and the stock it was 10 cents. It had gone to like 20 cents. But there was no volume, pink sheet. And so 22 cent stock. And I said, let's go raise some capital. We got through one of my connections, we met a big investor in Hong Kong, Li Kai-shing, one of the wealthiest guys in Hong Kong. And he had a chain of 25,000 stores in Hong Kong. And he said, I'll give you $16 million if I get the exclusive rights to Celsius for my distribution over here. So that was the first 16 million, and we raised another 15 million, and we raised another 25 million. The company's gone from a couple million to over $300 million now. Wow. And so, and I am participating in all of that now as a partner and stockholder of the company. So I'm on about 15 advisory boards and board of direct official boards and advisory boards of different companies. One is a company that replaces lighting in. It's called Zinergy, and it's a small pubco, but gaining some big traction. And the stock is doubling and tripling of late. And that's I love helping companies get into an IPO situation, because if I can get them pre-IPO or just at the beginning of a pubco situation, a lot of times we have tremendous growth opportunities ahead. And that's where I like to get in on the ground floor. So that's what the newsletter is all about.
What's it called?
Startup Millionaires.
Okay, so what kind of stuff are you going to be writing about and talking about in Startup Millionaires?
So first of all, I talk about what is it I look for in a business, and how do I identify great opportunities. Right. And that, at the end of the day, the more deal flow you have, you got to have good deal flow, because if you only have two things that you can look at to invest in,
right,
neither one of them may really be a good deal.
Right.
If you've got 500 things to look at, how do you whittle it down to get the top 3 or 4 out of that 500? Because that's ultimately what we do, is we're dealing with hundreds and thousands of opportunities that we're whittling down to 3, 4, 5 that we actually invest in. So that process and how we identify the initial products and go down the line, that's part of the learning that we give the people that subscribe to the newsletter.
Yeah, well, I can say that you certainly have given quite a bit here through your passion. This is one of the things that maybe the final question I have for you. You seem, probably to me, I didn't know you back in college when you started that business or high school, but you seem to have lost zero effort or energy or enthusiasm for being an entrepreneur after decades and after this success. So what drives you? What continues to drive you like this?
Well, I've got two kids and 2 grandkids now. So it's like, it's cool to see that. Yeah. Big Christmas coming up, going to have the whole family together this year. And I believe that when I look at, my oldest son's 31 and my youngest son just turned 22, and a couple of grandkids, and I see that that I want to be able to hand the baton and just let them take it and run from here. So they're both in my business, and my oldest boy's been with me 10 years now in business. And so I just feel that giving them the access to all the things that are going on is good. And I still really love finding new opportunities and watching them grow. And so over the years, I mentioned 20 products that have gone to over 100 million individually. And so to this day, I still focus on, okay, what's my next $100 million success? Right. And we have one this year. So it doesn't happen every single year, right, but in 35 years, it's been pretty close to 25 now. So this is what excites me, to be able to take somebody that's got something that they have no idea what they're sitting on, and within a short period of time, develop it into a $100 million success. So there's no better feeling in my world than to do that. So I still enjoy it, and now I give my kids equity in the deals as we go along. So they get to see the stocks going up in value, and hey, sometimes they go down in value.
Right,
but if we're doing the right things and we're bringing our value to the table, because some of them are private, but we also, do get involved in pubcos. But, Startup Millionaires, for example, a startup can be a private company, and they all start private generally, and then they move along and raise some capital and get into the first round and the second round, and then maybe they go public. But I believe that the true money can be made if you know when to get in at those early stages, before the 4th and the 5th financing round, right, and before they go public, because pre-IPO has great opportunity.
Yeah, and just so everybody understands, when you say pre-IPO, so you're looking at companies that are successful privately, they're poised to get into their IPO, but typically the IPOs are kind of rigged by the investment banks that take them public. Their friends, they get their clients, if you will, and friends in the IPO for them, and then we get the scraps after it launches. So are you targeting right before the IPO? That's kind of like what you're looking at?
Well, I actually target even before that time. Like right before the IPO, sometimes it's too late, because actually sometimes right before the IPO, it might even be a little more expensive, because they find out in the IPO it's got to be a lower price.
Right.
So I've talked about stories where I was offered some pre-IPO stock, supposedly at a discount to market, but it was a discount to the private market. But once the IPO hit and the IPO went down, because as you mentioned, there's some riggings going on sometimes in those situations. It's, if I would have taken the pre-IPO stock right before the IPO, I would have lost half my money.
Wow.
So I like to get in, much more at the earlier stage when it's, when the company's just coming out, or in the round one or round two, Series A, Series B, whatever it might be. Early on is my preference.
I get it. So now basically, and you've got a lot of experience kind of spotting these, seeing which ones are working, which ones aren't working. So is that one of the things that you'll be writing about in Startup Millionaire, saying, hey, I see a company, you can get in on a round now, it's early enough where they're likely going to head towards an IPO and you're going to really make it. So do you think that's kind of the sweet spot for investors right now? That's a great place to go in rather than try to go in and buy stocks in the public market, find these a little bit earlier stage and pick them and go.
It's absolutely one of my sweet spots. In many of more of the companies that I've been involved with have been non-IPOs, pre-IPO, startup rounds. And I mean, just recently we made an investment in a company over in India on a private market. It was $1 million valuation. It's approaching a $50 million valuation now, and it still has not gone IPO. Wow. So and it's going to go beyond that. So these are the kind of things I like to get in on. Is when they're $1 million, knowing that it's probably going to be hopefully a couple $100 million soon.
Well, I'll be reading that newsletter.
Stay tuned.
Yeah, I want to know about these. That's terrific. Listen, you had such great energy and information. I can't thank you enough for taking the time to sit and share all that with us, and I'm looking forward to see the stuff you write about.
Hey, thanks for having me today, Patrick. Great to be here.
Yeah, so great to be with you. Thank you. I love it when people come up with new ideas, when they innovate, when they see something that they think could be an opportunity, and they go out and pursue it, and the next thing you know, it works. Brian Page is one of those guys. I wasn't sure what to expect. I'd never met him before. I'd heard of him. But when I looked at his innovative mind and what he created as far as how to develop wealth as an entrepreneur, I was pretty impressed. The guy's articulate, he's driven, he came up with something that in hindsight looks very obvious, but nobody has done it before or was really doing it before, and he figured it out, he got it done, he's been teaching it to other people. I want to tease you into this. I want you to wonder, what is it that this guy did? Well, you're going to have to tune into my interview with Brian Page to find out, and here it comes. Brian, thanks so much for taking the time to talk to us.
I'm glad to be here.
So let's talk about what got you doing what you're doing today, like what led up to this.
I started as a real estate investor right out of college. I didn't really want to have a traditional job. I wasn't very good at holding a job down. I got fired from basically every employment situation that I had, so I was looking to be an entrepreneur, and I got into real estate. That's how I started as a real estate investor.
What got you into real estate?
I was just researching how people become wealthy. I spent a summer after college doing an internship, and I had a lot of free time after work. I was an intern at Hilton Resorts at Hilton Head Island in South Carolina. And so I started reading all these books on making money in the stock market, making money investing, and in real estate. And I learned that most people either hold their wealth or become wealthy through real estate. And I thought that might be what I wanted to do.
It's interesting because, with the concept of wealth breakthroughs, I see people approach this from different ways. Some are, they've got a passion and that drives them into a particular business and industry. And others like yourself saying, I want to have financial independence, be wealthy. Yeah. So let me go and study, the highest probability ways I can get there. So it sounds like that's kind of the path you took.
Yeah. I really wanted to just find something that was kind of tried and true and something that wasn't too difficult to follow in someone else's path. And I also wanted to create cash flow because I really wanted financial independence, which is totally different than wealth building, and I think that's what everybody should aim for.
Can you make the distinction? So how are they different?
Most people, when they aim to be wealthy, they decide, I want this kind of net worth. I want to be worth X millions of dollars or have a certain amount of money. But what they don't realize is that if you have a certain amount of cash flow to pay for the lifestyle that you want, then you can be what most people call financially independent.
Right.
And that number might be a lot lower than what most people think of, like when I get $5 million, then I'll be where I want to be financially. So I think cash flow is something that is different for each person, but if you can create that cash flow in your life, you can have financial freedom.
So with real estate, How do you create cash flow out of real estate? Or how did you when you started out?
Well, I did it the traditional way. So most people would buy property and then rent it out and make cash flow that way. I was also flipping properties, which wasn't really cash flow, but I was making pretty good money doing that. I was doing all the traditional real estate models, but it was after the real estate crash around 2007, 2008 that I had to start over. And so coming out of that was very painful.
I was going to say, was it a really tough time for you?
It was very tough.
Like, were you caught off guard and, were you holding a lot of stuff?
I mean, everybody was making money on the way up, everybody. And when it crashed, it took me off guard. I was into speculative real estate pretty heavily. And I was caught like Warren Buffett says, when the tide goes out, you see who's naked, right? So the tide went out with the real estate market, and a lot of people lost everything, and I lost everything. And so my whole portfolio and of course my credit was decimated, and I had no money, and so I had to start over. And so for several years, I was trying to figure out what that thing would be. And I didn't really want to go back into debt again. I didn't want to go back in and do traditional real estate. And so I was just looking for, I guess, a hack. And I found that hack through short-term rentals, through Airbnb. And that's kind of where I started down that road.
How psychologically do you get past that? So here you are, you get out of college, you say, I want to generate wealth, I want to be financially independent.
Yeah.
And you're successful, you got momentum.
Yeah.
It seems like you figured it out, right? Like, okay, I did it.
Yeah.
And then you lose everything, including your credit, which is very important if you're going to try to get started again. So how did you psychologically find a path forward to be able to even start exploring new ideas?
Well, it was very painful because I thought I was a big shot. I became a millionaire in my 20s doing real estate. And when that all got taken away from me, I mean, I was in the hole. It wasn't just that I was back to zero. I was severely in a bad spot financially and in debt and all that kind of thing. So I had to find a way to start over. And for me, it was realizing that with this new sharing economy, with the new gig economy, whatever you want to call it, that you don't need any of the traditional things that you need with most investing. In fact, you can leverage other people's assets to create money in your life. And that's what I found right away, is that I could approach people that had homes, that had properties, and leverage those to create cash flow in my life. And that was how I was able to become financially independent the second time.
So what was that like? So you're showing up saying, here I am with no money, no credit, but I've got an idea.
Yeah. Oh, it was not easy.
Yeah, so I can imagine what that might have been like. But so what was the idea exactly? You said, I think I can probably piggyback on this thing. So walk me through the thinking process.
Okay, so it's essentially what it is this rental arbitrage. So just like you take something wholesale and sell it for retail, well, the same thing here. I'm taking a property that's for rent for, say, $1,000 a month. I turn around, put it on a home sharing site like Airbnb, and I make $3,000 a month. I pay the owner what they're asking, $1,000, and the difference I get to keep playing that arbitrage. And the reason that you make more on a site like Airbnb is you're selling that property by the night, and you're paying for it by the month. So there's a tremendous spread there that you can make money. And the amount of cash flow that you can make on one property is significantly more than if you're just a traditional real estate investor. So I was being able to do that by approaching owners and saying, hey, I have this crazy idea, but if you'll work with me, I know it'll work. And I could speak their language because I was a landlord myself in the past.
And so you actually say that you generate more revenue doing this than when you're having to take the risk, go into debt, if you're flipping a house, putting in all the money, the time, the rehab, et cetera. You're basically just you're taking existing assets other people put their money into.
Yeah.
And then you're just you're figuring out, at least you said, it's like an arbitrage. You're just saying I'm going to buy it kind of wholesale, and I'm going to sell it piecemeal at a retail price.
Yeah, not just a little bit more, but an order of magnitude more. So 10 times more. For an example, if I were to take a studio apartment or a one-bedroom apartment, when I owned it and I rented it out long-term, I'd make $200, $250 a month.
Right.
Whereas now I can make $2,000 net on a one-bedroom place. Wow. So it's just, there's no comparison between the old way and the new way. And also with the traditional model, you have to come up with a down payment. So if you're going to buy, you put down 20%, you buy the property, you got to have credit, all these different things. And there's nothing wrong with that. It's a great way to build wealth, is to own property, and I do, once again, own property. But this allows anybody to go turn someone else's asset into their cash flow. And I don't know of any way to do that except through this new sharing economy.
And the homeowners, the people who are actually renting to you, are they okay with you going? Because if they're renting monthly, do they also rent nightly? They just they have two prices quoted, or they just want to do the monthly rental?
No, I'm just looking for a traditional landlord that's looking for a one-year lease, and I sign a one-year lease with them, but I get written permission to do home sharing. So they know up front exactly what I'm doing. And then there are owners that I'll partner with. So if an owner has a place for rent and they're not really sure if they want to do this with me because it's too out there, then I can partner with them. And I can say, let me put your property, turn it into a short-term rental, and then we'll split the revenue 50-50. So they make more than they would normally, and I make money with no money out of pocket, no deposit, no long-term commitment, no lease. So there's several ways to do this.
Was Airbnb kind of an inspiration to kind of look at that and say, God, look at what these guys are doing. I could probably do that, in the way that you're doing it?
Yeah. Well, I use Airbnb as the platform. There are other sites. There's VRBO. There's a bunch of sites like this. And the really interesting thing is it's expanded way beyond property. So now there's ways to do this with cars. You can use sites like Turo. There are sites where you can make money with your backyard or with your raw land. You can turn yachts or RVs into income. You name it. I mean, just about anything now can be shared and turned into cash flow.
Yeah, and you keep referring to the sharing economy. In a prior project, we interviewed Paul Zane Pilzer, the economist, about the whole sharing economy theme. So on the macro level, it's a fascinating thing to see how it's emerged.
Yeah.
The demand, though, is the demand really constantly there? Do you find yourself sometimes saying, well, I rent this place for a month or for a year, and it's not meeting the demand's not meeting our needs, or is it still robust?
That's a good question. Well, the number of users is growing as fast or faster than the number of providers, the number of people that are providing the homes, providing the underlying thing that you're going to pay for or rent. So we're not yet, I don't believe we've entered the maturity yet for the market. There's still tremendous opportunity. And if you look at all these sharing economy companies that have come online, most of them have only been around about 5 to 10 years. So not very long. So we haven't entered that maturity yet, and they're expanding very aggressively. So there's plenty of opportunity.
Are there certain profiles you look for as far as regions, or do you do cities only, or immediate suburbs, or how do you figure out where to go with this?
Well, I started locally, and I recommend most people start locally wherever you live. But I now have taught thousands of people over the world how to do this, and I've seen that there's really no correlation between how well somebody does and the size town they live in. So I have people that are in rural areas, small towns that are doing well, large metropolises, large cities, different countries, not just in the U.S. So that, and the other thing that's really interesting is it's not just tourist destinations. I live in a touristy area. We're here in New York. This is definitely a big destination. But it works in places that you would not think it would work. And the simple answer for that, how is that possible? Well, it's because you are serving essentially the same purpose hotels serve. And if you look at where hotels are located, they're located basically everywhere. They're on the side of the highway. They're in small towns. They're in big towns. Those are people that are looking to travel short term. And guess what? People are also looking to travel short term on Airbnb and VRBO for various reasons way beyond just tourism.
Well, let's use me as a use case. So I'm gonna get some free advice here.
Sure.
So,
of course.
through whatever circumstances, I'm holding 2 homes in New Jersey, in the suburbs of Manhattan, but it's still a little bit of a trip. And as you're saying it, I'm like, oh yeah, there's this hotel over here, this motel, and they seem to be actually pretty full and pretty busy. But I'm looking at suburban town. I wouldn't think there'd be much demand, and I'm running rents right now that have me at a negative cash flow. Just that are long term. So should I start to be thinking about when my lease comes up, on these rents, I maybe should go into short-term rentals and see if we can actually turn this into a positive cash flow situation?
You certainly should. In fact, your cash flow, I would say conservatively, could be 200 to 300% more. So if you're doing $2,000 a month, you could look at $4,000 to $6,000 as a short-term rental. That's pretty typical. So it's tremendously more money. Now, would you have to furnish it? Yes, you would have to furnish it if it's an unfurnished place.
Right.
But the net cash flow is considerably more. So it's definitely something that some owners are doing now, and I would suggest that people take advantage of it.
Does it work on different size scales? Because one of the houses, which investment property from long ago, but it's a smaller 2-bedroom place that maybe lends itself to a little bit more. The other one's 5-bedroom, 5.5 bath, a bigger place. Do people rent those types of places?
Yeah, I found that I've done everything from very low income areas, very inexpensive places. For example, I have a 3-bedroom house that goes for $99 a night, which doesn't sound like much, but you do that times 25 days a month, maybe a couple $100s on the weekend, it turns into some serious money. So that's a lower income area, and I also have luxury properties. So I have a multi-million-dollar home that I don't own that's in Scottsdale, Arizona, And we do very well with that, over $100,000 a year on that
Wow.
one property.
Wow.
And now we're looking at a bunch of properties in Florida that are also luxury properties. And then, of course, I have some in the middle as well. So anything from low income all the way up to luxury can be put on these sites and turned into essentially an income stream.
And you said you use mostly Airbnb as the platform.
I do, yeah.
So this is fascinating because I know so many people, entrepreneurs, that want to, same kind of a disposition, saying, I really want to work for myself. I'd like to generate cash flow. I don't really have a great idea, and I don't have any capital resources to go invest in something.
Yeah.
So this is like, it sounds like the investment is little to nothing to get in.
And you can create cash flow in the next 30 days. So I'm a big fan of Robert Kiyosaki, who I think you had on the show as well, or one of your other shows.
We interviewed for one of our other series.
Yeah, and Robert Kiyosaki talks about you're out of the rat race when your passive income exceeds your monthly expenses. Well, I don't know of any other vehicle where you can do that with one or two moves. So within just a couple properties, you can get 2 or 3 of these properties on Airbnb and be generating more than the typical American makes in a year full time. So I was able to do it in 4 properties. So by the time I got 4 properties, I was able to replace the income from my full-time job, and I was working 50 hours a week doing that, down to 3 or 4 hours per week managing my properties, which weren't even mine. They were just managing my Airbnbs. So the time savings, first of all, to be that wealthy with time was tremendous for me, because my dollars per hour went stratospheric. But then to also be essentially out of the rat race within just a few months. And not only have I done this, I've had many, many students that have done exactly that. So for somebody that's starting now with nothing and wants to get out of the rat race, I don't know of any faster way to do it.
It's one of those almost sounds too good to be true kind of
Yeah,
propositions, because as you describe it. But let's do a walkthrough. So okay, now I'm watching this.
Yeah.
I'm hearing what you're saying. I'm like, oh my God, I would love to do that.
Yeah.
But now so now my first step is to identify some properties.
Sure.
I guess, right? So where do I go to identify properties? I look, for rental pools online, realtor.com, or where would I go?
There's 2 main sources. There's online and offline. So online could be any number of sites for your local area. It could be anything from Zillow to Craigslist to your local paper that's online. Any kind of online source. If you just Google your city and rentals, you're going to find all kinds of long-term rentals. So that's where you start online. Endless sources there, and depending on what country you're in, you might be looking at other sites in Australia, for example, than you would here in the U.S. And then there's offline leads, and that would be driving neighborhoods, looking for rental signs, looking for anything that's out and about. So you go to a real estate investors meeting, for example, and find a real estate investor. That's a great source, because usually a real estate investor is going to have many properties. So if they have 40 properties and they're like, hey, I got a couple of vacancies coming up next month, you want both of those. And so you get multiple properties from one owner. So there's online, there's offline sources. Really anywhere you would look for a rental to live in, that's what you're going to look for rentals to do this with.
Do I need to have some amount of credit worthiness? If they're going to rent me a property, I guess. You because you understood it, probably were able to talk.
The answer would be normally yes.
Yes,
But if you
yeah.
do what I teach, you don't have to even have that.
Really?
I was able to do it with my credit being essentially decimated.
That's what I was wondering, saying why somebody had to take a chance on you, saying I'm gonna you're not showing the wherewithal to be able to honor the terms of the lease, but nonetheless I'm going to bank on you.
Well, there is no lease, because there's 2 ways to do it. So the way I do it is I approach it as a service. So if I'm approaching you as an owner and I say, you're asking $1,000 a month for your property, what if I get you $1,500 a month with no extra work on your part, no extra liability, no extra risk? I'll do all the work, and we'll do month to month. So at any point, if you don't like the way this works, I'll just walk and we'll part ways.
Wow.
Who would say no to that? So now you're not going to check my credit. I'm just going to say, okay, I'll be here tomorrow and I'll take photos and we'll get this thing listed. Let's say it's a furnished property.
Right.
So we sign a deal, you sign a piece of paper, and we're off to the races. So I'm offering you a service.
Right.
So there's no lease, there's no deposit, there's no first month's rent, there's none of that. And you'd be surprised how many owners will take that deal. So in that case, you don't need any credit. I was actually able to get owners on board with doing leases with me, even with my credit being bad, and that's a whole other discussion, how to do that. But it is possible to do it even when you don't have any credit.
Is your preference the joint venture with the owner as you just described, or just say you're just going to walk in, take the lease, and take over? But they, in the lease, you have to have permission to sublet, I guess.
Well, I prefer leases, because a lease gives me full control over the property for a year and all the profits, 100% of the profits, because I'm not giving them anything beyond what they're asking for. They're just getting a great tenant. They're getting me as a tenant. Right. When I go with a partnership, then I've got to give them some of the profit. The advantage, of course, is there's no commitment on my part, and there's a lot less money involved. So it just depends on what model you want. I like to do leases because I know for sure I'm going to make money with it, and I don't mind signing a lease. But if people are risk averse, they might want to try the partnership model.
Yeah. Do you ever run into difficulty with people saying, I don't want nightly renters in here?
Oh, yeah.
So you have to find the person that's got a disposition and say, I'm okay with letting you sublet.
Yeah. Don't misunderstand me. There will be people that say, no, I'm not in any way interested in this. But there are people that say yes, and you don't really need a whole lot of yeses to start adding up to some serious income. So I just approach people and I play it as a numbers game. And some people are going to say no, and some will say, hey, that sounds interesting. Let me consider that. And I've gotten good at explaining to them why they'd want to go with me over any other tenant.
What is the bandwidth on this? Like, how many properties can the average person kind of manage, in this scenario? That's
a good question. So I started when I first started out, I got about 3 or 4 properties, and it started to get a little bit unmanageable because at that point, let's say you have 4 properties. So every night or every other night, you have 4 sets of guests checking in, 4 sets of guests checking out. That happens every day or two. So essentially what you're doing is you're running a hotel, except your rooms are distributed. So we're here in a hotel right now. All the rooms are in one location. They have a front desk that manages everything. You don't have a front desk. You are the front desk. So what I had to learn early on was how to outsource all that because I didn't want a job. So I found a way to create what I call a virtual front desk. And the virtual front desk is just what it sounds like. It's a front desk that manages all the guest communication, the cleaning company that has to come and go, any kind of things that might break on the property, handyman services, all that kind of thing. But you can do it all virtually nowadays.
Right.
For a few pennies on the dollar, you can outsource all of that work, all the day-to-day tasks. And so my job simply becomes looking for more properties. So you're able to leverage your time that way and essentially take a step back. So now you can start acquiring more properties. And it's really just a matter of how many you want to get. I mean, you can get dozens. There's quite a few people that are doing over $1 million a year on Airbnb now with 40, 50, 60 properties. But I would say the average person, if their goal is to, for example, do $100,000 a year, they're looking at about 4 to 6 properties
that they can manage
in order to make $100,000 a year. And that's kind of where I started. That was my goal, was to do a 6-figure income. And I did that actually within 6 months, my first 6 months on Airbnb.
So now, if I'm a student, like I show up and say, this sounds great.
Yeah.
I got to do this. What's the timeline in training? Like, how long does it take me to learn to really do this properly before I'm actually starting in my first house?
That's a loaded question. If you're going to do it without me,
no,
it could
with
take
you.
a while.
I'm saying with me. Yeah.
No, that's fast. I actually take people through an entire training where I teach them how to do this. So usually I'd say it's about 60 days, 30 to 60 days. Most of my students get their first listing in the first 30 days, and then they're working on their second listing by the end of 60 days. So I would say it takes 2 months to really understand the process and how it works and how do you communicate with these guests and how do you fill your calendar and kind of working out all of the kinks. And a lot of people are doing that while they're working a full-time job. So they're doing it on the weekends. They're doing it in their spare time.
Yeah, so I'm guessing, or now I was guessing, but now I know there's nuance here. It's not like it doesn't take a week. I could train you. If it's 30 to 60 days, there's a lot of little nuance that matter to make this work right. Otherwise, it could not work out so well.
Yeah, it's not difficult to do, but it is complex because you have a lot of moving parts. Now, it's not complex when you have 1 or 2 listings, which is probably 95% of people on Airbnb only have 1 or 2 listings.
Right.
Once you go beyond that and start scaling, that's where you need systems because it's all about scaling is where you make money in any business, and that's the key here is understanding that.
Now, I have to imagine Airbnb likes this, right? I mean, it gives more properties on their platform, more offerings for the people who are showing up. So do you find that that's true? I'm assuming it, but I don't know it.
I would say they're mixed on that. And the reason is because Airbnb essentially presents itself as a company that helps people make money with their own house or with their spare room, or it's kind of a side gig, a side hustle.
Right.
Not so much geared towards big operators or people that are going to build a big business on the site, although that's where a tremendous amount of the bookings and revenue comes in on Airbnb is from large operators. So really, it can be both. It can be a side gig or it can be a big business.
I've noticed, and you brought up Robert Kiyosaki earlier. So we went down to Arizona, to Phoenix area, Scottsdale, to interview him. Yeah. And what we did is we rented a house on Airbnb, brought the crew in, the full film. So we had enough bedrooms for the film crew, a place to film him, et cetera, et cetera. And I noticed that this particular Airbnb, this house, that it was it was branded because they had multiple homes. So do you think they're doing what you do, or do you think they own the homes? Because I'm sitting there saying, wow, they just built a business inside of Airbnb where they've got homes, probably 5 or 6 of them around Scottsdale. And it made me think, when I go back, I'm gonna look for one of those places because it was set up right, it was nicely, done, it was clean, all the things that you'd care about. And I was like, I can't believe somebody's building a brand within the brand. So is that sort of what you do? I mean, would people know your brand on Airbnb, or would it just be kind of invisible?
You are probably staying in one of my business partners' properties.
No
so I
kidding.
have partnered, yes. Now, I don't brand my own Airbnbs, but I have a business partner, and we've now, it was a former student of mine who started doing properties in Scottsdale. And so we have 18 properties in Scottsdale, in the greater Scottsdale and Phoenix market. So you may have stayed in one of ours. And
Now, is that house owned by your partner?
no,
or-
none of them are owned.
Wow.
They're all leases.
Wow.
So, $5,000 to $10,000 a month leases and up. And it's a very hot market. Scottsdale is one of the best luxury markets in the country.
Yeah.
And you may have stayed in one of our properties, yeah.
Wow. So so there's a few ways to skin this cat, I guess.
There are.
Depending
Yeah, that's the great thing. It's open to really anybody. Somebody that has more money, that has the ability to invest a large chunk of cash, they could do that in a luxury property without the risk of having to go buy that property and not understanding and sure of the market. And it's also open to anybody on the lower end as well. And it's really all just completely relative to whatever the market rent is. So you can make $1,000 a month, or you can make $8,000 a month on a property, depending on what the market value of that property is.
So now somebody's watching this again, I'm trying to think like them, and they're saying, so I didn't miss it, right? There's still going to be demand, and there's still an upside with this. It's not saturated at this point for entrepreneurs coming in and saying, I'm going to do this model.
No, not at all.
Yeah.
No, there's definitely, the recent stat that I read is that there's 1 million new users per week signing up to use Airbnb for the very first time.
1 million a week?
1 million per week.
Wow.
Yes, that's what the current stats are, and that's worldwide. But the thing about Airbnb is the awareness now is very high. So if you were to ask 10 people, have you heard of Airbnb? Most of them would say they've heard of Airbnb. When you ask 10 people, have you stayed in an Airbnb? It's very, very low.
Yeah.
So awareness is high, adoption is low, and that basically shows us that we're not anywhere near a maturity level yet.
And I have to imagine this is where if I were an Airbnb shareholder, or if I were somebody that was invested there, I'd say I'd be encouraging this kind of behavior, because I think it's creating demand, right? The fact that more properties are coming on and that they're in all these varying regions, and that's creating more demand on my site, and I'm getting a piece of all that.
Yeah, well, Airbnb is getting a piece of all that, and we're not taking advantage of anybody. We're letting the owners know right up front what we're doing. Everything's in the open. Everything's in writing. We make sure that we protect the owners. So I go so far as to insure the property. So I insure it for any damages. If they were to burn to the ground, the owner gets paid off. If somebody were to sue, I get liability coverage. We make sure every I is dotted, every T is crossed, so that there's not going to be any issue for the owners. And so, this is something that there's a demand, and we're fulfilling a demand that's out there and providing a service. And so we make money, and the owner's happy, and Airbnb is, I'm sure, very happy.
And do you find the owners are like, I would never want to mess with that, so I'm happy you're doing it, as compared to them saying, oh, that's a good idea, I think I'll do it?
I've been asked that before. Of all the people I've met with, and I've met with hundreds of owners face to face now, I've never had somebody say, that's a great idea, I'm going to go do that right now.
Right.
Because if they were going to do that, they probably already would be doing it. And most owners, they just want one thing. They want to have no vacancy, and they want to have a tenant that's going to take care of the property and pay the rent on time. That's what they're looking for. And they really just want to avoid one thing, and that's vacancies. And they may have multiple properties, so they're just trying to keep those things full. And the last thing they want to do is start a new venture, a new side business, and they might not even have a system to manage them, so they're not really interested in that.
How much longer do you think this is going to run before we get kind of like where supply and demand sort of start to equal out?
You got me. It's hard to even say. I wouldn't know how to answer that question.
You think it's years at least?
Oh yeah, definitely years. Yeah. I mean, I remember when Airbnb was very new on the scene. People were like, this isn't going to last. It's not going to work. There are some challenges we should talk about with regulation. There's a lot of regulations, just like there is with Uber and all these sharing apps and those kind of things. But the interesting thing is that about 90% of towns and cities in the U.S. that we researched, we hired a research firm, allow home sharing. So we're sitting here in New York, for example. New York is not a very good city to do short-term rentals in. It's very, very restrictive. but there's very little, if any, restrictions in other areas that are within a short drive of the city.
Right.
So I have students here in New York, and they simply go across the river to New Jersey, and they get listings in other locations. So the key is to knowing where you can do it.
Yeah, I have to imagine homeowner association rules.
Yes.
Where I live in Park City, Utah, I know some areas
Yeah.
you got to have
HOAs.
month or more. Yeah, the HOAs demand that some areas they can do nightly and some are weekly. So it's just what part of the town are you in? It's a resort town.
Yeah, it's just like any real estate. You can't do commercial real estate operations in a residential area. You can't live in a commercial district. There's limitations, and same thing here. There's limitations, but that's no reason that anybody should not look at this as an opportunity. There's massive opportunity here.
So I'm somebody out there searching again. What's the most important question I should ask you?
I would say, how can I learn what you're doing? How can I jump in on this?
Yeah, and so you started out doing this yourself. You now are teaching it. How many students have you taught?
We're approaching 8,000 people around the world.
Wow. So there's a big appetite for it.
Oh, definitely. Yeah, people are hungry for this, and a lot of people have been successful. That's the thing that really excites me. Is I've had teenagers that have been killing it on Airbnb, and I have people in their 70s that have never done anything with real estate, never done anything with, didn't even know what Airbnb was, and they've got properties that are doing well.
I was just about to say, my next question is like, who's your typical student? Like, who's showing up for this?
It's there isn't really anybody typical. Every kind of socioeconomic background, 31 countries around the world. Airbnb is in every country but North Korea right now, so it's really anywhere there's English-speaking people have probably heard about me and tried this. And quite frankly, it's open to just about anybody. I had a couple of people that didn't know how they were going to retire, the people that were in their 70s, and they literally had no plan for retirement, were planning to live. This one gentleman I'm thinking of was going to live with his kids, and he was in a small town in Georgia, and he took my training, finally went through it, applied it. Now he's got 3 listings, makes about $3,000 to $4,000 a month net, and he said, "You saved my retirement." So I believe it's a retirement solution for people, and it's also just great for millennials and young people who are the main users on Airbnb, and they want to create income with the gig economy, and they're doing it.
And that anticipated my question, because I'm thinking like the avatar in my mind for this is
Young.
a millennial,
Yeah.
right? But I also, in the conversations we've had during Wealth Breakthroughs with so many people, there's a real challenge, especially here in the United States, with people not being ready for retirement. They're at retirement age, not even close to ready. They don't really have the resources to go.
It's a crisis.
and
It's a
invest.
retirement crisis right now. Most
yeah.
people are not prepared. And just like I mentioned at the beginning of the interview, most people say, well, once I have $1 million and I can live off that interest, then I'll be able to retire. But I think that's a very backwards way of looking at it. It's a very old model. What you want is not the $1 million. What you want is the cash flow and the interest that $1 million generates, which really is not much when you think about how much that actually
Interest
creates.
rates are so low.
Very little.
You can't live off
Even if you invest in a hot stock market, which could go down. But when you create cash flow, that's very different. You could create $2,000, $3,000, $6,000 a month cash flow doing this model through real estate, but in a different way through home sharing, that could immediately solve that problem. And that's what I'm finding. So what we're finding is that most people that host on Airbnb are generally baby boomer age, and most people that use Airbnb are millennial or younger. So that's starting to shift, but we see, for me, I've seen all different ages that have become hosts through what I teach.
And talking about retirement,
Yeah.
and I think that you said a lot of people have it backwards, right? You need to generate cash flow is a better idea than trying to live off the interest, which is a paltry interest at this point.
Yeah.
On whatever. I mean, the type of cash flow you're talking about, you'd have to have several $1 million in the bank to be able to produce that much interest every single month.
Yeah.
So is there a whole reframe? I mean, the idea here in Wealth Breakthroughs, what are the breakthroughs that we can have? What's the new understanding that we can have that can help create wealth? So when it comes to retirement, do we have it wrong? Do we have it backwards? How should we be looking at it?
Well, I don't know that it's backwards because the old traditional models still work. A financial advisor would tell you, you put your money into these investments and we're going to build a plan for the next 30 to 40 years. And at the end of this plan, if it all works according to historical averages, you'll have this much money coming in and you'll be able to retire. But what's not being taken into account is that we live in this new economy. They're calling this new economy. And the things that are possible now were not even possible 10 years ago. So Airbnb didn't exist 10 years ago. You couldn't have made $1,000 or $2,000 a month forever on a property that you don't even own. That wasn't even possible before. You can make money now with a car. You can put a car on Turo and turn your car into cash flow. There are all kinds of ways now to start creating money an income in your life that didn't exist before, and they're possible because of technology and because of the new economy and what I call the gig economy, or most people call the gig economy. So to me, it's the idea that retirement doesn't have to be something that's out there in the future. If I wanted to stop working today and just live off the money that comes in from this new economy and what I've created, I could do that today. And I've seen people do it very, very young.
Is that the idea of financial freedom, like having cash flow that supports you without you having to do much of anything?
Well, I think wealth, I want to redefine wealth, at least the way I define it, is not just income or money or net worth, it's money plus time. So if you're here in New York working as a stockbroker on Wall Street and you make $400,000 a year, but you work 80 hours a week and your health suffers and you do that for 30 years, I don't think that's wealthy. Versus you could be making $10,000 a month, working a few hours a week, traveling the world, which I know many young people that do exactly that. I know many Airbnbers that do really well doing that kind of thing. And they have time freedom and they have financial freedom. So it's being able to enjoy your life, do things you want to do without spending all your time working.
So it's more of what you do as compared to what you have.
Yeah, it's what you do. It's the idea of work less, have more. It's the idea that most millennials, if you ask them today to identify who they are, to tell you, if you said to somebody, who are you? And you ask a baby boomer, they'd say, I'm an accountant, I'm a teacher, I do this. But if you ask a millennial, they don't identify with what they do for a living. They identify with what they're passionate about. They identify with experiences. They identify with lifestyle and these kind of things. They don't so much identify with, I do this thing, because it's no longer you pick a career and you do that for 30 years. That paradigm is over. And so I think that whole shift is happening, that people are realizing, wow, there's more to it than just, yes, we want to have income. Yes, we want to build wealth and do all those things, but we also want to have the time to enjoy it, because time is a finite resource, unlike wealth.
Are you looking at innovating any additional things that maybe build on this, or are you just looking to expand more of what you're doing?
Absolutely. I want to teach people how to do this across multiple platforms in the gig economy. Anything from making money with vehicles to houses to anything that's kind of along this vein, and be able to start focusing on creating cash flow rather than working for income. So anything that's not trading time for money, I'm about.
I imagine the fundamental principles of what you're doing, can be transported to other sectors. It doesn't have to be housing as you're describing. So once you kind of have it wired in one place, I guess that's kind of a multiplier where you can put it in multiple places.
Yeah, and it's not just in this whole sphere that we've been talking about. It's also in anything that relates to technology. So there's 12 and 13-year-olds that are making millions of dollars a year on YouTube, just putting crazy videos on YouTube that are viewed by so many people that they can monetize them. Right. There's people that are creating blogs and creating podcasts, and they have sponsors on these podcasts. I have a podcast, and they're creating income that way. So the idea that you can create something, put it on the internet, and it lives forever, and it can generate income for you. You do it one time, and it generates income again and again and again. That's no different than owning a stock that pays dividends. But I would argue it's better, because you can create it for free without any monetary investment.
And less risk, because the stock can crash.
Less risk, and we're moving towards, the value is in the information. Information is the new oil. Information is the thing that's worth more than any other asset. And you can actually sell information, you can share information, you can create information, and that can be sold, and that can be an asset in and of itself. I think most people need to get their mind away from the idea that you have to have a traditional investment to create income, and you can look at the opportunity that exists online.
Well, we know that the biggest companies in the world, what are they brokering but your information? If you look at Google, Facebook, et cetera, I mean, they're getting a lot of information on you. And
you look at Uber. Uber is just simply a piece of software, and Airbnb is a simple piece of software. Airbnb is worth billions, and yet they don't actually own any of the properties. They're just providing a service.
Yeah, it's that Uber doesn't own a single car, Airbnb doesn't own a single hotel, and they're worth more than any car companies or hotels in the world.
Airbnb just surpassed all the large hotel brands for value.
Yeah, isn't it just amazing?
And that did that in 10 years, whereas Hilton Resorts has been around for 110, something like that, 100 years.
Mind-boggling.
Yeah.
With what you're doing specifically in the short-term rental market, if there's any kind of a downturn, a pullback, is that a concern for you?
Well, that's a good question. I thought about that, and I thought, after talking to some experts that are in the field, we kind of determined that if there's a downturn, I think that short-term rentals are going to do better. And what's going to happen is, in a downturn, people are going to look for additional sources of revenue. They're going to turn their own properties into cash flow. And beyond that, people are going to look for more value when they travel. So instead of spending $300 on a hotel room, especially if they're traveling with their family, they could spend $250 or $200 and stay in a home that has 3 bedrooms and 2 baths. So on Airbnb, generally, you're always going to get more for your money than you would in the hotel industry. So I think the first to suffer would be the hotel industry, whereas home sharing could actually expand and do really well in a downturn. And I think that that the opportunity really lies there. If there is a huge downturn where people were to lose their jobs, they can monetize their own properties, they can monetize the home they live in, even if they don't own it. And I think that's a huge opportunity for most people that might not have any other opportunity to create income.
Well, I find this really fascinating, and I guess at this point maybe you're glad that 2009 happened, and you were knocked off your course to be able to put you where you are. So do you look back on that and you're grateful for it at this point?
I am very grateful, and it also humbled me because I think that the story of any hero's journey is that they seem to be doing well, and then they go through that pit of despair, that low point where they're redefined, they have to come out the other side. And it's taught me a lot about how to be content, whether you have a lot or have little. And I'm very thankful that I was able to have success again. But I would say it's definitely a blessing and definitely something I'm thankful that happened to me.
We're very thankful that you made the trip to come here and sit with us and share all this. I think it will inspire a lot of people, and I wish you continued success.
Well, thank you. It was a lot of fun, and I appreciate you having me here.
One of the things that I value most in my life is wisdom. I go out, I look for it, I pursue it. When people have wisdom and they're willing to share it with me, man, do I take that seriously, and do I have a high level of gratitude for them doing so. Dave Blanchard has been around for a while. He's had a lot of experience in wealth development, and he has an extraordinary amount of wisdom in the way that he approaches things. You're going to look at this next interview with Dave Blanchard, and you're going to see how this wisdom will apply to you and how you can put it out into the world, put it on the ground, and make it work for you. He's had a phenomenal impact on me, and now I'm happy to share it with you. Dave, I'm a big fan and really excited to have this interview, so thank you for taking the time to sit with us.
Thank you. My pleasure.
So let's talk about your background and kind of how you got involved in the kind of work you do today.
Okay. Short version.
Yeah, it doesn't have to be that short. We got
After
time.
school, started the financial services business. And this is part of our discussion about wealth creation.
Yeah.
If I'm going to sell insurance, I'm going to sell it to people who need a lot of it.
Right? Makes sense, right?
So I specialize with doctors.
Right.
Pretty soon, doctors needed a whole lot more than insurance. They needed to set up and practice. They needed leasehold improvements. They needed staff. They needed them trained. They needed practice management.
Right.
And within a few years, it was the largest practice management consulting firm south of Los Angeles and San Diego. And I'm investing in real estate privately because I figure that's a pretty good investment, right?
Right.
And all of a sudden, the doctors are saying, I heard about that apartment you did. Can I get involved in the next one? So we started having more of them get involved in the real estate, and pretty soon I sold off the practice, and we were just developing real estate.
Right.
Then 1986 came, Tax Reform Act. By 1989,
Right.
we were building our last $5.4 million project. We sold for $5.3 million.
Not a good business deal.
Didn't work really well.
Yeah.
$1 million down, $1 million second. Within 3 years, the market had dropped even lower. They just reneged on the loan. That fell apart.
Wow.
I was the corporate guarantor of all the lines of credit.
Ooh.
Yeah.
Yeah.
$1 million.
Wow.
And so when the company wasn't able to pay that,
Right.
they visited me.
Yeah.
And so I would spend the next 10 years paying it back.
Wow.
And that really was formative. Now, I could have filed bankruptcy.
I was just
And
about to ask.
I don't want to say to someone, don't, because sometimes it's really the right thing to do. But I had some lessons to learn. So I learned them very thoroughly. And during that process, I had a chance to read Og Mandino's book, The Greatest Salesman in the World. And it was like putting on an old shoe. It's really comfortable.
Yeah.
And I remember saying, he's got the same teacher. He's got the same teacher. So that developed into meeting the Mandino family. Next thing you know, I'm writing the feature film script for one of Og Mandino's books.
Wow.
And in January of 2000, Betty calls me. I'm shooting some commercials for CNBC in New York. We get off early and we take the crew down to get into the Lion King. We're standing in the cancellation line.
Right.
January 2000. The world hasn't come to an end. And Betty called me. And she said, Dave, the rights to the greatest salesman in the world are not being renewed. Would you be interested? Of course, I said, this is a rhetorical question, right? She said, no, I'm very serious. I said, okay. So over the next hour, we talked with the publisher in Florida, her attorney in New York, our attorney in Los Angeles, and by the time we got done, we'd worked out the framework for me to come home, leave the film business, and take over the Og Mandino brand name, the family jewel, the greatest salesman in the world, the 10 Scrolls, and begin to build a training company. And good news for everyone, we're scripting the Netflix series.
Oh, really?
Yes, which is very exciting. 10-part episode of the greatest salesman in the world. To make a movie out of that is really hard to do.
Yeah.
So we're going to do it in episodes.
I love it.
So we're very excited about that. So everything's finally, after 20 years, is when someone says, gosh, I wish I was in your shoes. And I'm not sure you want to walk that path. If you do, that's cool, because show you how to do that.
Yeah, there's the old adage that some people think they're born on third base and think they hit a triple.
Yeah.
They didn't know what it was to strike out at bat a few times. And
Merrill Osmond said that to me once. He said, someone said, gosh, I wish I had your success. And I said, yeah, it was an overnight 16-year success.
So fill in one gap for me.
Okay.
Here you were, real estate crashed. You had a guaranteed a loan you had to pay off that you decided that you're going to feel the pain of paying it off just to learn something as compared to bankrupting. And next thing I know, you're in the film business. So where's the gap? What happened in there?
Real estate business.
Yeah.
I want to do something meaningful.
Yeah.
So I produced a music video on teenage drinking and driving.
Wow. Okay.
And the next thing you know, it's on television, and it's in 30,000 schools. I mean, that was fun. Let's do another one.
Yeah.
So we did one on acquaintance rape. That wasn't quite as popular because we did it specialized on college campuses. But when we were doing the premiere of that film, we're right in the middle of the show, and we could hear a boy just burst into tears. And the therapist grabbed me and said, follow me, and we went outside. He worked his way out of the audience and outside, and it turned out he'd been a victim of child abuse when he was 12.
Oh, wow.
And they prosecuted the man. He'd gone to jail for it. But his father said to him, okay, it's done. We're going to talk about it ever again.
Wow.
Until that moment in time.
Wow. Okay.
I left that, and I said, we have got to do the quintessential film on child abuse prevention. So a buddy of mine put in $265,000. I put in $265,000, and we hired Manuel Lewis, Webster, Tiffany Brissett from Small Wonder. That was a great show back then, Little Robot Girl.
I remember.
Gordon Jump, WKRP in Cincinnati, and we did the quintessential series on emotional, physical, and sexual child abuse. And the U.S. military bought one for every Department of Defense school worldwide.
Wow.
Every family services unit worldwide, and another 40,000 schools in Canada, New Zealand, Australia, United States bought it.
Wow.
Well, that was all happening before the world fell apart. And I'm going, I kind of like making films. So when I'm going to be paying back $1 million in debt, and I really am, we were poorer than church mice. It was scary.
Yeah.
We sold our favorite eagle statue and fruitwood inlaid grandfather clock out of the back of the truck to the guy buying our new house, or our old house, excuse me. And as we were moving, and here we were just about penniless, and so I said, I'm going to become a writer and director. Not just as an avocation, I'm going to actually do this, right?
Yeah, it's like a sure thing.
Well, I was able to do it before I was paying for it, so I got to write and direct it. My writing and directing debut was the first one I ever did. It's one of those kind of things.
Yeah.
And so I started writing, and a good friend, Rick Larson, who's now the president of Sutherland Institute, he was running a production facility. He called me one day, and he said, I've been looking for you. I remembered your educational films. I've got a client that needs a script written, and I need a little bit of your flair. Would you consider writing it? I said,
sure.
Checkbook, 0, 0, 0. Okay, yeah, absolutely. I'll be happy to write it. Yeah. So I poured my heart into this script, and that turned into 200 TV commercials.
Wow.
5 feature film scripts.
Wow.
Several TV specials, the Goodman Family Special on CBS, etc. Quite a fun career. That's what led to me writing Og Mandino's script for the Christ Commission. That led us to Betty asking if I'd be interested in the movie rights to the greatest salesman in the world. That led to building an entire company around those principles.
Right.
And here we are today.
So something very interesting here is that these varying, call them business activities,
Yes.
careers, are not really that related. You're the common denominator, but they don't seem like, hey, there's a particular skill set that you have, and that's what you do for decades of your life. You kind of like did many different things and figured out how to succeed at it. What's the common denominator?
2.
Okay.
1, tremendous passion for it. And when you have passion, you work without counting the cost or tracking the time. You do whatever it takes to figure it out.
Right.
And 2 is just an undying work ethic, which I thank my father for. Greatest gift he gave me.
Was the work
It's a work ethic.
Yeah. So talk to me then, because I know you also write books,
Yes.
right? So what inspired you to write books instead of movie scripts or TV commercials? And what's the content of the books let's maybe go down a couple of them,
Absolutely.
what were you trying to communicate?
Well, first of all, when we started the Og Mandino Leadership Institute, I hired 3 people to write the curriculum, 3 of the top people at the National Speakers Association. The product didn't sell. I think we sold $53,000 worth of product in 3 years, and we're back in financial challenges.
Right.
And I'm a spiritual guy, so I turned to the creator of heaven and earth and said, what's the deal here,
Yeah.
I didn't go through 10 years learning how to pay off $1 million in debt to be back here again.
Right.
What do you want? Patrick, it was an interesting moment. I prepared you to write this. My response, what have I got to say? 3 books later, 3 assessments, 2 practicums. I had a little bit to say, I guess.
Yeah.
And I think the lesson in that is for anybody who's watching this, that sometimes because we're living the experience, we minimize the significance of it and the power it could have in inspiring another person to walk a difficult journey. We minimize the value of our own story.
Yeah.
I had.
Wow.
And now it's the subject material for Today I Begin a New Life, which is all about connecting with people and using your mind constructively to get inspired ideas and living in the now in passion-driven action. The Observer's Chair, which is all about healing self-esteem and becoming the very best version of you. And Equanimity, conquering Mount Entrepreneur.
Yeah.
Story I'd been telling for years about pulling into the parking lot. I kept saying to companies, look, you don't understand. Your people are still in the parking lot. You're talking to them as if they're on the path. Okay, all you do is this and this. They're still stuck in the car.
Right.
You've got to get them out of the car and get them on the path. So the book starts in the parking lot. Let's get out of the parking lot. Let's get into the path, and let's go up the mountain and climb Mount Entrepreneur. So those are the 3 books. And then the 4th one on the way,
Yeah.
More
Let's talk about it.
Than, T-H-E-N, more than enough. It's wanting more, but knowing what your enough is, so that you're not creating just for you. You reach a point where you're now creating to bless the world.
So expand on that a little bit.
In a nutshell,
Yes.
10% of your income goes to a worthy cause. You live on 90.
Yeah.
What's your enough? As soon as I have this stuff, that's enough. Once you're at a 90-10 and your 90's enough, now you increase your income, you can increase your giving. Because it's been my experience. I have an NSX and a Range Rover and a Malibu boat and a cabin. Wonderful things, right? But not one of them fills the hole in my soul. They're all there to share and bless lives. What fills the hole in my soul is giving.
Yeah.
When you have somebody who's in a tremendous need and you can step up and solve that issue,
Yeah.
you know,
Yeah, I do know.
it just moves your soul.
Yeah.
You want to be in a position to do more and more and more of that. So more than
Yes.
enough.
So the theme of this series is wealth breakthrough. So we want to see people having wealth breakthroughs that they've seen to be stuck. Maybe some of them are on the part of the path of the struggle, where you've been, and I guess at this point the struggles are a blessing, right? Because that's what formed your story that allowed you to share. So in your mind, if somebody says, I have at least the thirst, the desire to want to develop wealth, And in many respects, people will say that it's not so much that I want so much more for myself, but I do want to be in a position to be abundant, to be able to share, to be able to give, what have you. Or some people might say, I do want a better lifestyle. I do want a bigger house. I do want a legacy for our children, whatever the motives might be behind that. What is your feeling at this point, or your position as far as how people need to make a wealth breakthrough, or what the elements of it are?
You said the magic word, desire. But it's understanding the word desire and how it's applied.
Okay.
Because it's the fulcrum on which everything balances. What is that desire? What are you wanting to create? Great discovery. 1992. The educational films stopped selling.
Yeah.
And that was our source of income. That was barely keeping food on the table, right? And all of a sudden we're like destitute. And I've got $1 million life insurance policy. I have $1 million in debt. It doesn't take long to figure out how those two could be related, right? Except for the night I planned it. I didn't go through with it. And the sun comes up and I'm really angry. I long to cry to the God of my youth. But the God of my youth will not hear my cry. I must change my God or change my cry. Want to guess which one had to change?
Do tell.
The cry.
Yeah.
That's the desire. Secret desire and real intention. What is it? Because is the desire to engage in life, to live, to embrace obstacles, learn from them, use them to be more empathetic in teaching others, to connect and serve, to create value everywhere you go and with everyone you meet, and to contribute to the world? Is that the burning desire? Or is the secret burning desire to have life be a little easier and less stressful? What's the desire?
So identifying that's critical.
If you're fantasizing about a Ferrari, nobody need tell you the color of the car, the smell of the interior, the road you're driving on. The fantasy unfolds because of the desire. However, if we use our mind differently, which every wealth creator is going to want to know how to do this. There's 5 ways to use it. Like for an example, mentally rehearsing something. The next meeting you're going to have, the next presentation you're going to make, maybe the product you're going to be selling, you're mentally rehearsing, you're playing through it, seeking for inspired ideas, intuitive impressions, creative solutions. That unfolds because you have a desire to create something, to bless a life, to help a person, whatever it might be, whatever that desire is, to create, not to escape, but a desire to create. So it really boils down to desire. It boils down to, am I trying to escape? Am I going to pretend like I care about people until I can get a tropical island where I can move and not have to deal with annoying people anymore? Is that really a desire? Or is my desire really to engage and bless lives and leave a footprint on this planet? Which one really is it? Because the evidence shows up when we get clear on the dream, we get clear on where we are, current reality, we look at all the millimeters between here and there, and do we keep going to what it's going to be like when, or do we focus on the next millimeter? That's the evidence of whether that's the desire, escape, or is it create? Is it create?
So talk to me about dreaming. Like, what's the importance of a dream, or do you think that dreaming is too whimsical? It's got to be something more concrete than having a dream?
This is my soapbox.
Go ahead.
This is my soapbox.
Let's go.
I've been practicing this since I was 13.
Okay.
Matter of fact, last year I found the Honda 150 Dream, blue with a red seat. Not the same one. Had 2,700 miles on it for old as it was. That wasn't too bad,
That's
right?
good.
But I found it, and it sits in my garage right now. So every time I pull into my garage or walk to get in my car, I look over there, and it reminds me of the principles of how to create a dream. Not just have it, but actually create the dream. Because that was the first dream I created at 13.
Right.
It was the motorcycle, because I could drive at 14 in Alabama, so that's why I created it.
So talk to me. So when you say you created a dream, so you dreamt of having this particular thing.
I had a desire for it.
Yeah.
I also had a business. I had a paper route. And I'm going to now set goals in my paper route for getting even more customers, collecting my fees even more effectively. I'm going to accomplish this goal, because when I accomplish that goal, I will have the money to fund this dream.
Right.
So you have the dream, then you fund it by setting the goal on the business. So you take a look at it like this. I'm excited to share this with you. You ready?
Yeah.
I have a life.
Yeah.
I have a business.
Right.
I live in my life. I work on my business. Too many people put their life inside their business. No offense, but it's like snorkeling in manure. Got to get them separated.
Right.
You have dreams in your life. You have goals in your business. Okay? Now, requirement. Business needs to be a worthy income-generating vehicle. Something that blesses lives for good.
Right.
Could be anything from chiropractor to a filmmaker that's doing topics like this to bless people's lives. A worthy income-generating vehicle. Critical component of dream creation.
Right.
Now, in my life, I'm going to have dreams. 90-day dreams, 6-month dreams, 1-year dreams, and the dream I'm ashamed to want.
What do you mean by that?
Because when I find that one, I'm going to hear the dialogue about my worthiness. And every time I do that, I discover that dialogue is showing up right now in my dream creation and getting in the way. That's why you find the one that's you're ashamed to want. Let me give you an example.
Yeah.
Really simple. You take your life, your business. You say, okay, this is very practical, by the way. What's the income for the next 3 months?
You want a number?
Based on
Okay.
current income. You don't need to share with me,
Okay.
but for the viewer,
Right.
just write down on a piece of paper. Next 3 months, what is your projected income based on current activity?
Right.
Okay. Now, what would happen if we increased that income by 10%? What would that amount be? So you say I've got $10,000 a month in income. That would be $1,000 of a 10% increase, right?
Right.
Next month, 10%, another 1,000. Next month, 1,000, $3,000. Now I have a budget for my first 90-day dream. $3,000. What do I want to do in my life that would be $3,000 that would meet 4 tests? Test 1, I can't stop thinking about it. It ignites my passion and will drive my action. 2, it will encourage me to stretch and grow, to become a better person. 3, I want to share it. Both share it so people can appreciate it, also to inspire others to do likewise. And 4th, to willingly embrace the structure required to create it. That's a worthy dream. But I have a budget for it now, so that's kind of cool. So for $3,000, what could fit that category? Ooh, I'd like to go to X.
Right.
Okay, you got that. I turn to my business. What goals could I set? What activities could I do, like calls, etc.? Especially the things that I've been a little reluctant to do. I've been putting those things off because I'm a little uncomfortable doing that. I want the dream. It's going to drive the action. So I start to look at the things I'll want to do, the goals I'll want to create. Boom, I create the goals, accomplish that, funds my dream. Now I've built my business to that level. Let's give it another 10% increase. Now I've got like $3,400 plus the previous 3.
Right.
Now I got $6,400 for the next dream. What dream you want to do for $6,400? You do it another time. Now I've got like $9,500, $9,600 for the dream. You do it another time, I got like $12,000, $13,000 for that dream. It drives the actions to accomplish the goal to fund the dream. Now I'm working on my business, not in my business,
Right.
on my business to drive it and create the goal.
So it sounds like in large part we're talking about motivation. One could say I'm setting a goal to increase 10%, over the next 3 months.
Yep.
And but that's the extent of it. I have a goal to do 10% more, but there's not the dream that's got some of the attachments to it that you described with the 4 elements that. And suddenly, when you do that, it adds all this motive force, behind the actions.
Yeah, because if it's just, I've got a goal to increase, we're chasing money, and I've never seen the chasing of money provide the sufficient inspiration, breathing of life into us to actually do sustained action over a sustained period of time.
So maybe then finish the sentence. So having a wealth breakthrough is not chasing money. It is what?
Well, you chase money, it runs.
Okay.
You serve people, it flows.
Yeah.
That's why the worthy income generating vehicle. If it's worthy and you work on your business, which is serving people more and more effectively, the goals are accomplished, the money's generated, and it funds a dream.
You've mentored a lot of people to success, helping them get from where they are to where they want to be. And I'm curious as to what some of the experiences you've had in that realm where you saw the lights go on. Like, what was it that somebody suddenly realized that maybe has been stuck, blind spots, or can't figure out why they're stuck, and suddenly, in some way that you work with them, they have their wealth breakthrough? Do you have any particular examples that you could share?
Yes, let me give you a principle
Yes.
and then an example.
Perfect.
I just do it like this.
Okay.
This is a shell. I'm in the shell.
Okay.
I know why I went in the shell. I'm in the care and keeping of a pedophile aged 3 through 5. This is the only safe place on the planet.
Right.
And a lot of people are in here. They're in this shell, and creating this success happens out there. But out there, there's a snowstorm and a blizzard, sub-zero weather. We've got to go out there to make a phone call, for an example. And we're naked. Exposed, right?
Yeah.
So we run out there and we pick up the phone. We dial a phone number, and it's like ring, 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 cortisol surge, ring, 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 cortisol surge, voicemail. Norepinephrine rush. We leave our message, run back in, and it takes 2 hours to get comfortable again to go out and make another phone call.
Right.
A lot of people who are pursuing wealth, they would love to be wealthy, in fact live in a bit of a cocoon. If there's a breakthrough, it's recognizing, am I in here? Because if I'm in here, success is going to be created out there. And the biggest breakthrough is to discover the dialogue I'm having about myself is robbing me and everyone around me of my greatest gifts. We've done assessments on 150,000 entrepreneurs.
Wow.
That's a lot. I've coached personally with 7,000 of those. Common. Extremely high levels of empathy and intuition. However, this dialogue talks them out of their own inspiration. Want to have a breakthrough?
Yes.
Get an inspired idea and actually act on it as if it's an urgent assignment and discover it actually was inspired, and don't talk yourself out of it. Most of them have very high levels of practical judgment and common sense, but yet they procrastinate.
True.
True?
True.
I ask them all the time, okay, so you procrastinate. What happens when you reach a deadline and you have to jump in and do it? What do you say? What do you think they say?
They jump in and do it.
Wow, that wasn't so hard. Wow, why did I wait so long?
Yeah.
Great question.
Yeah.
For the entrepreneurs, here's a breakthrough for you. Dialogue, self-sabotaging, toxic internal dialogue that's telling you don't have the gifting. It's screaming so loudly that it's louder than the task. Task gets closer, closer, louder, louder, louder. Finally, louder than this, we shut it off. What do? We step into our natural genius. And it's so incredible, even we're surprised.
Do you think most people underestimate themselves?
Enormously. They have no idea. They've been playing delay, delay, jump in, surprise for a lifetime. When they finally start living in their genius, magic starts to happen. When they learn how to practice what we call intrinsic validation, which is stepping into a person's world, really listening, create such a safe place that their wall can come down, then their energy and cooperation floods out. Og Mandino called it the greatest secret of success in all ventures. Being able to create that moment. Now you've got connection with people. You're in your genius, knowing what needs to be done. And you're using your mind to get inspired ideas and intuitive impressions instead of being in fantasy or catastrophe all the time.
Right.
There's the breakthrough. If there's anything I've done for clients that want so badly to get there and can't figure it out, is for them to break through in those 3 areas. Connection with people, using their mind constructively, and acting. Act now. Og says, my dreams are worthless, my plans are dust, my goals are impossible. Scary line, huh?
Right.
All are of no value unless it's followed by action. Action's living in our genius. He goes on to say that if I want to remove the flutters in my heart, I act without hesitation. For only action reduces the lion of terror to an ant of equanimity. And it looks like this. All of our friends watching this, they're going to watch this, they're going to get all excited about it, and the distance between where they are and where they want to be is going to look like this. All I got to do is jump. Okay, that's not too bad. Then the next day they go to do it, and it looks like this. So we go read another book. Then we go back to reality. Then we go to a seminar. We go back to reality. We hire a coach.
Right.
Go back to reality. This is reality, and creation occurs here.
Yeah.
We must jump without hesitation. If you're doing something worthy, you'll get more and more comfortable with the jumping. But we want to be in action. You don't get to shortcut this process. Well, when I feel more comfortable, I'll do it. You won't feel comfortable till you do it.
Right.
I want more confidence. You won't have confidence until you do it. I want to mitigate the fear. The fear won't be relieved until you do it. So those are the 3 breakthroughs. It's like, gosh, could it be easier? Couldn't you give me a pill? A book to read or something to watch? No. Learn how to connect with people and love them.
Okay.
Step into the world and love them. Discipline yourself to use your mind constructively to get inspired ideas that ignite passion that will drive your action. That's why the dreaming's so critical. We'll do things in our business we haven't been doing because we have a dream that's lighting us up. We're willing to do this to get this.
In your view, then, what role does manifestation play in all this? Like, the way that people talk about law of attraction, manifestation, does that factor into the dynamics of what you're talking about?
When I hear the word manifestation of the law of attraction, I think of 2 things. One, that when we're actually in action, passion-driven because we have an inspired idea, something magical does happen. People are put on our path that we can serve and who can serve us. It speeds up creations to its fastest possible pace. But it doesn't just happen, it is intentionally created. In terms of the law of attraction, it's a physiological reality. I have mirror neurons. You have mirror neurons. Overabundance of them in our amygdala, our fight or flight center in our limbic brain. Now, I meet you, and my mirror neurons pick up the tone and tenor of your voice, your facial expressions from the 200 different sets of muscles, your posture, sends a signal to my brain, molecules to my body. Those molecules connect to the cells through sugar fibers, communicate a message. It's an energy message because the law of attraction is energy, but it's physiological. Now, I'm either feeling drawn to or a little repelled by based on what my mirror neurons are saying to me. Interesting piece, right?
Yes.
Now imagine, I walk in to talk to you, and all the way here I've been thinking about how could I sell them? I need the commission. I want to do this. I want to close on that. And then I step into the meeting. I try to act like I care about you. You probably won't be trained well enough, even an FBI profiler wouldn't be, just in all fairness, to pick up the facial expressions on my face that are leaking out because of my previous thought process. But your mirror neurons do. It's that subtle.
Wow.
And they send a signal to your brain, molecules to your body, and you're feeling a little uncomfortable with me, and you don't even know why, because all of that occurred before you had a conscious thought. It's that fast.
Yeah.
We can't fake it till we make it.
Yeah.
So if we're going to practice a law of attraction, we actually have to care about people because it's discernible. It's discernible. So we show up very conscious. Og Mandino said it this way: how will I handle this? One way. Silently and to myself, I'll say, I love you. I'll unwrinkle my brow, bring a smile to my lips, and echo in my voice. And who is there who will not buy my goods when his heart feels my love? That was 1967. Mirror neurons were discovered in 1992.
Wow.
But he's really speaking poetically to that very process of being comfortable with a person. There's a reason for that, because our thoughts do leak out on our face and in the tone and tenor of our voice and in our posture. You can't fake your thought processes. So if we want to have a breakthrough, we actually want to start caring about the people. That's why when we say we're going to chase money, well, and act like I care. I really care about you, but I really need the money because I want a new Porsche, you know?
Right.
It doesn't work that way. I actually have to care about you, work on my business, which is service, 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 accomplish the goal. I can fund the dream, and it's worthy of it.
Yeah.
Because everything I did touched a life for good. The money's clean. That's great money.
That's an interesting distinction. You know, it struck me when you said the money's clean. It's
Yeah.
great money. What's not great money?
That's a really scary topic.
Well, we're not here to be safe.
Well, my first go around at wealth, I was still trying to fill a hole in my soul from my childhood. And I'm not going to do the list of belongings, but they were extraordinary. You know, you go to Ferrari, ski lodges, beautiful home, full-time housekeeper, gardener, 40-foot custom Bluebird home. I could go through all that kind of stuff and just say, yeah, Rolex watches. Nothing filled the hole in my soul. I still remember driving off of Mount Helix, coming to a stop sign, and going, oh my goodness, I didn't put on my Rolex. Now what do? Do I continue and be on time for the meeting, or do I go home and get my watch? What do you think I did?
You went home and got your watch.
I went home and got my watch because I was my watch. The money I was earning was to try to fill the hole in my soul. Is that dirty as in like mafia dirty? No. But it wasn't for a worthy purpose. Now, I've got nice things. But if I had to sell them all, I'm not attached to them. You want to be careful that in the process of wealth creation, we understand what real wealth is, because I'll share with you the breakthrough.
Go ahead.
Case in point. Happens to me all the time. Client calls me last December. They went from a couple $100,000 a year to $750,000 a year. Pretty good growth for a couple years, right?
Sure.
Right? They committed to put 10% of that aside to give to worthy causes. They lived on the difference. It funded everything from retirement, everything on. They're living on the 10. Their children are in a Christmas play at the community theater. So they go to watch, obviously. During the intermission, they're talking to the folks around there in the audience and discovered, didn't know this community theater invites all the children from that community to participate. One's in wheelchairs, autistic children, learning disabilities. They all have something to do to make that Christmas play happen. She was so emotionally moved by that, she turned to her husband as they sat back down and said, how much is left in our giving fund? And he said, $10,000. He knew exactly where she was headed. He said, I agree. The next day they call this director. We were at the play last night, and we learned something about your theater. And we were so impressed. We've made a decision. We're sending you a check for $10,000. Now, they're sharing this with me privately. I'm not mentioning any names to keep it that way. And they weren't doing it to brag. They were doing it to share with me because it was such a tender moment.
Right.
They said this woman broke into tears and was bawling. And finally, all she could say was, you have no idea. You have no idea. She said, it's the most important thing we've ever done in our lives.
Wow.
What do you think they're doing this Christmas?
Yeah, give me more.
Yeah, and they've upped the percentage.
Wow.
That's how you want to live. It's a neighbor. And I talked to his personal assistant. He says, I have to tell you something. Jason called me and said, I want you to buy this number of pairs of boots and meet me down at Pioneer Park. That's where the homeless people in Salt Lake live. And they get down there and he says, okay, these are size 10. Those go to Bill. These are 8s. Those are Mary's. This neighbor, I won't mention the company, but he sold her for hundreds of millions of dollars.
Right.
And he's buying boots for the homeless people in Pioneer Park. One of many, many, many things he does in the year. One of the most gracious, giving, kind people. That's when it gets joyful. Now he lives in a 50,000 square foot home, indoor pool, outdoor pool, vineyard, bought the cul-de-sac and put up a gate. I mean, it's 100 acres.
Yeah.
He is one of the most amazing human beings I have ever met.
But to use your term from earlier, he's not his Rolex.
Yeah, he's not stuff.
Yeah. Doesn't
He's
mean you
all
can't
about-
have stuff.
Well, he has great stuff.
Yeah.
He owns a diving company in Hawaii, for heaven's sakes. I mean, he's very, very wealthy. But if you spent time with him, just out in public, you would never know it. He's just so friendly and kind and outgoing and helpful and committed to changing the world.
Yeah.
I'll tell you one more.
Go ahead.
I'm with a friend down in San Diego. He just sold his company, netted $110 million. Not bad, right?
Not bad.
It's okay. Everybody says, wow, I could go get this, this, and this. And I asked him, I said, what are you doing with the money? I was close enough to ask him that.
Yeah.
He said, well, I took $10 million and put away in investments because at a 5% return, that will replace my salary from the business. Okay? What are you doing with the other $100 million? He said, I'm going to change the world. Now I know since then to now, that's all he's been doing is changing the world. His enough was $10 million because it produced the income. He said, I still answer the door for the pizza guy. I still do the dishes with my wife.
Right.
Now he says, I have bought a couple nicer suits. But there's nothing in his life that changed because he already had enough. Right. He was already a successful executive at the company that was sold. He wasn't waiting to get rich to go travel the world. And have you ever heard those people say, I just love to travel the beaches of the world?
Yeah.
You do that for like 2 or 3 weeks, and it's like, now what?
Yeah.
Like I'm bored, you know? Let's go do
sounds
something
pretty boring.
good. Let's go create something.
Yeah. So there's these two profiles, really, and maybe you can describe not the difference on the surface, but the difference of what's underneath, where you have the person like you just described, wealthy, cashes out for large sums of money, and they have such a sense of fulfillment that's now, how can I use my fortune, which almost sounds like they would even say my fortune, but this fortune, to go change something in the world and make an impact in that way. And if you look at the wealthiest people, you look at Gates and the Gates Foundation and Buffett putting his fortune in, et cetera. There seems to be that genre, if you will, of super wealthy people. Then you have another genre of people who actually did create big wealth. But they still seem like they're filling a hole. They're buying bigger and bigger yachts. They're going through divorce after divorce. They're somehow still can't get to a point where they have the gift of fulfillment in their life.
Isn't it tragic?
It's tragic. So where did they go wrong? They're able to create the wealth. I mean, in a material sense, they did it, and yet it's still, to them on that personal level, doesn't make them happy.
Having been there, smaller scale, but having been there with several $1 million, I know why I had the hole. And it's not unusual that something like that created it. So I can't have any judgment for someone who's trying to buy stuff to fill a hole. You just want to give them a big hug, tell them it's okay, and you're going to pursue that till you die. And when you die on your deathbed, it's like, I still feel this emptiness. The difference in the first category, they're not doing this for fulfillment. They were already fulfilled. They see this as a stewardship responsibility. I'm a steward over these funds. I have all my needs met. Now what can I do to change this world? It's just a different view.
Right.
It's no longer about them. That's a beautiful place. That just takes healing.
Yeah.
And some people have been able to create wealth without ever healing. And that's really sad.
So they still had the attributes of being able to generate and create wealth. They had those attributes. So there's some virtues there. But unfortunately, there's also a hole that debilitates.
They have wealth, but they're not wealthy.
Yeah. So given that distinction, how would you describe being wealthy?
Reason for the book, more than enough. I think we're supposed to want more. Our clay. We have a tendency to want someone else's clay, their life, their body, their hair, their car, their house. We take our clay, our current circumstances. And I think this is important for your listeners because some people don't like their clay. You don't understand, Dave. I don't like this. I got this happening, this happening, this happening. I go, well, but that's your clay. And it's given to us uniquely to prepare us for our life. So we choose our clay. I choose my clay, my circumstances. Now I begin the process of creating the most I can with what I have. But if I had $10 million, I don't have $10 million, so that's not an option. What do I have? What can I create with what I have? Because once we start to magnify the clay we've been given, here's a principle. We're given more clay. There's not a power in the universe that'll give you more of something you don't want. We're supposed to want more of our clay. So we start building more and more and more. We're given more and more clay. It's so essential in this build that we define what is our enough. If we know that going into the build, it's not in concrete, but having an idea, that's a big enough house, that's a nice enough car, that's good enough vacations, this is enough for retirement. Once we know our enough, then we can begin the process of giving more than the 10%. The 10's critical from the beginning, because if we don't give 10 from the beginning, we'll never give because we'll never have enough to give. Right. So we want to be giving that 10 because there is fulfillment in that 10. It just gets sweeter with more. So we build more to enough, put more in the giving pile, and we can have even greater levels of joy in our giving. But we're already fulfilled. That's the secret. We're already fulfilled. If we're looking for wealth to solve our feelings about ourselves so we'll be happy, it'll never make us happy.
Yeah, I've heard money's just an amplifier. So whatever you got, it's going to amplify.
If you're a troubled person, you're going to be even more troubled.
Yeah.
If you're a good person, you're going to be an even better person. Absolutely.
Yeah. Well, so looking at this, I guess I'll call it this phase of your life, you know, with the new book and these themes that you're sharing with the world. How are you feeling about things? I mean, there's more wealth in the world than ever. Looks like it's going to increase and accelerate. Do you feel like we're moving in a good direction?
That is really a loaded question. Love capitalism. So I love competition. I think we ought to put it into the healthcare system a little bit more effectively.
You and
I
me
think that
both.
would help us. Yeah.
I even got ideas around that.
Well, not a bad idea, right? I'm a little concerned that some of the wealth accumulation has a few too many people trying to fill a hole in their soul. I'm a little concerned about that. For those who are getting ready to build, I would say I'm most excited for them. Because if they could build differently, they could be fulfilled in the journey, joy in the journey of building.
Right.
Because the joy is in the creation of the dream, it's not the destination. We ought to go off on that for a minute because intentional creators create through dreams. Here's the dream, they create through, they're on the next one, the next one, the next one. And when they're done doing their own, they start doing it for others, right? So they fall in love with the very process of getting an inspired idea, taking on a challenge, correcting it, building something that wasn't there before. They love the process of creation. Too many of the other people we're talking about are destination driven. When I get to this point, but that's never enough. So I get to this point. We're always waiting to be happy when we get somewhere. To this new generation that we're talking to, okay, you want a breakthrough? Let's have some foundational principles in place. Let's love people. Let's use our mind constructively. Let's live present in the now using our natural genius. And let's take the clay we've been given and let's create as much as we can. Let's not be in comparative reality. We're not in competition with anyone. We're becoming the best version of ourselves, right?
Yes.
And we're using our funds, 10% of it, to serve. And when we have enough to meet our needs with the 90, we give more. And I think it's something that can't be compulsory.
No.
Now, this is going to be revelatory. I don't think you can tax it out of me.
No.
I'll give you an example. You say, well, the wealthy need to be taxed more. You can take all their incentive away for doing it in the first place.
That's right.
That doesn't work. They'll just stop doing it. So we don't want to be in that position. That's like those who want to build wealth who've got debt. So, well, first I got to pay off my debt. For everybody watching this that wants to be involved in wealth creation who's got debt, don't focus on paying off your debt. Focus on creating something you don't have and have some joy from it, a little bit more and a little bit more. You'll get your debt paid off. But if your focus is debt, getting out of that hole back to even is not a motivation for creation.
back to your own personal story, you had $1 million in debt, and you went off and did something very creative and very new that you seemed to enjoy, which got the debt paid.
The debt got paid, and I had a blast making films.
As compared to feeling like you're slaving away and lamenting about how the world's not fair.
Patrick, I was working 16-hour days, and no exaggeration, almost 6 days a week and for almost 10 years.
Yeah.
And there is no exaggeration, because I was writing a film, editing a film, and shooting a film all at the same time. You got to do 200 of them over that period of time. That's really complex work.
Yeah.
Why would you work like that? I remember Bill Bennett's Book of Virtues. I wrote and directed the infomercial for PBS. And I kept telling the New York producers, let's not shoot this stuff up at the lake with the great big lights and imitating the sun. Let's go shoot the testimonials first, because they're going to tell us so much, then let's write around the testimonials. They made us shoot that first. So we shot it first. Then we went and shot the testimonials. Not one foot of that footage shot up at the lake made it into the infomercial. But here's what happened. It got delayed so far, and PBS has got a drop-dead date, which means I had to edit for 36 hours. That's 3 editors, 12 hours apiece. I slept for an hour and a half, got a shower, did it for another 36, slept and took a shower and did it for another 36.
Wow.
I still haven't recovered.
I don't
But
doubt
how
it.
can you do that if it's just boring, mundane, repetitive, burdensome work? It was my baby. It was my vision. My passion was ignited. I was executing on passion. We wanted this thing to be perfect. Yeah, that's what the dream creates.
I think implied in a lot of what you're saying, and tell me if this is accurate, but you have a premise that everybody has an inherent genius. It's not just some lucky few.
I don't think we've done an assessment yet where we didn't have natural genius. We just have a proclivity, a natural negative tendency to look at what's wrong. Well, we'll want to see what's wrong because it's probably a lot of noise keeping us from accessing our genius. But I want to get people in their genius, because once they start playing around with that, they start to find out who they really are. And when they find out who they really are, there's a peace that can come to them, a fulfillment that could start to come to them, and they start to get excited about getting an inspired idea, acting on it as if it's an urgent assignment, proving that it actually was inspired, feeling like they're in partnership with the universe in the creation of whatever they're doing, and you can hardly sleep at night.
And that's safe to say, discovering your own genius is a critical aspect of having a wealth breakthrough.
Well, I'll give you the objective.
Okay.
And I'm going to quote Dr. Robert Hartman from the Hartman Institute. The objective is to be real, genuine, and authentic, without the need to impress, pretend, feel ashamed, or fear. That's the most difficult task in our mortal existence and the highest level of maturity.
Wow. Repeat it again then.
To be real, genuine, and authentic. Real means to develop relationships with people. Genuine, root word, genus, genius. The root word of genius is genius. It's to fully embrace your natural genius and bring it to the service of another person. You don't embrace genius and say, look how brilliant I am. No. You shut off the noise so you can bring it and serve totally available. Can you imagine what you could do living in your genius in the service of another person and working on your business and creating those goals, right? So we live in our genius, being genuine, authentic, anthosectic, our true self. The noise, that self-sabotaging dialogue, that if I said half the things to you that you say to yourself, could we still be friends, that dialogue?
Right.
That's not our true self. It might be our dominant voice, but it's not our true self. That's where we get in our genius, so we could start to hear our true voice, our real self. Then we can be real, because we'll start creating relationships we're comfortable to. We'll be genuine. We'll jump in, we'll get the task done, we'll bring our genius, and we'll be authentic, anthosectic, our true selves. Can you feel the peace from that? No need to impress, pretend, feel ashamed, or fear. Most difficult task in our mortal existence and the highest level of maturity. Funny story. I'm a car guy. Okay, I'm a car guy. 2004, I've got a red NSX with a tan interior, 96. I got a 97 now, but I had a 96 then. I'm driving down the street, and these two 16-year-old guys go. And I'm going, do I really want to be driving a car the 16-year-old guys go? And I thought, am I becoming my stuff again? Don't know. Let's find out. We had these two buildings downtown. They were historical buildings, and one of them had a garage in the back. So I parked the car in the garage and covered it, locked the garage, and left it there for 9 months.
Wow.
And intentionally drove a Honda Civic with a cracked windshield. I just want to see if I could. I could. That's fine. When I got the car out, the battery was dead. That caused all kinds of problems because all the emission sensors were dead too, and then it was hard to get a emission test passed, etc. Anyway, bottom line was, are we our stuff? Are we trying to find happiness elsewhere? Or are we focusing on just being real? The objective, real, genuine, authentic, without the need to impress, which is to try to make a big deal of what we have, pretend, act like we have something we don't have, feel shame, the sham, that covering, have that wet blanket over the flame that burns inside of us, or fear. To experience fear, false evidence appearing real. Are we going to let fear crush us? Let's just be real, genuine, and authentic. Then we start creating wealth. Then we can use that money to create wonderful things for our family. I got a neighbor who takes 42 family members on a 2-week first-class vacation every year. You could put the math to that, right?
Yeah.
That's part of his enough. Some people might say, well, why doesn't he give that to an orphanage? If you saw his kids and his grandkids and what he's created in that family, every penny is worth it. It's incredible what he's created. An amazing human being, an amazing family. Yeah.
That's so great. Can you remember the first dream that you created?
Oh, yeah. Now, a couple years ago, my father passed away. And I woke up at 2 o'clock in the morning and I was missing him. And I had this impression to go look on KSL.com. It's the local online classified ads. So I went in the bathroom, didn't want to wake up my wife, and I plug it in. And the very first thing that pops up is a 1966 Honda Dream, blue with a red seat.
And that's a motorcycle, like a small, like a mini bike, basically.
It's a big motorcycle, 150 cc's.
Sure.
Here's the dream. I'm 13. I'm almost ready to turn 14. In Alabama, you can drive a motorcycle at 14. I've got a paper route, and it's really difficult to deliver the number of papers I'm taking on a bicycle. On Sunday, my mother's driving us around the Volkswagen Bug. Imagine the top back. I'm standing up delivering the papers like this. And she wanted to have the freedom on Sunday morning because that was like a 5 o'clock in the morning thing. So I have this worthy dream to create this motorcycle. It's $280. My father said, if you'll pay for half of it, I'll pay the other half. So I need to raise $140. So am I collecting, and I'm getting new customers, and I'm driving that business to get that $140, and I got it now. My father finds the motorcycle. My favorite memory of my dad is him driving down the street and pulling into my driveway with that motorcycle. It's interesting that that was the motorcycle for sale on the newspaper, at KSL.com. So I look all night for a picture of me at 14 sitting on this motorcycle. I find it. I send it to the guy and say, I want this. I'll pay you this much. And he wrote back, not only is it yours, I'll deliver it to you. So I have sitting in my garage a 1966 Honda 150 Dream, blue with a red seat with 2,702 miles on it that sits there. I don't drive it very often, but it's a reminder every morning when I go out to my car and every night when I pull into that bay of why I believe in dreaming. That was the first one I remembered.
Wow.
Dream, execute, accomplish, fund. Lifetime.
You mentioned 5 ways to use your mind, and I think you gave us one, but what are the other 4?
Well, there are 7 ways, 5 constructive, 2 destructive.
Oh, okay.
Now, 97% of people who are pursuing wealth have the gift to vividly visualize. 98% of those, it's pretty significant, use it destructively to catastrophize, play out worst case scenarios, or to escape to the future or to fantasize. 98%. 2% use it constructively. I'd like to switch that by showing people how to use it to get an inspired idea. If there's anyone I can serve, put them on my path and I'll serve them. To mentally rehearse the next event and get an inspired idea. To explore possibilities without making tangible commitments. To problem solve, to plan, to goal set, to identify those dreams. When our mind is in that space, what can I create? How can I create that? How will I serve? That is always answered with an inspired idea. That's what's manifest using vivid visualization. It's not the actual tangible thing. It's the idea that ignites the passion to drive the work to create the tangible thing.
So then if I were to list these, so basically to go down the list of the 5, saying how to use your mind. And actually, it's really interesting that you say there's 5 constructive ways and 2 destructive ways.
Yeah.
How many people are running the destructive modes?
98% of people with the gift of vivid visualization, which is 97% of everybody wanting to create wealth.
Really?
It's huge. And what happens is we go into fantasy, then life shows up differently, and we have this overwhelming physiological reaction. And then we start hating our life because there's nothing about our life that's showing up the way we would like it to. Then we start beating ourselves up, and we start to question our worth and our worthiness and our ability and our beliefs and our character and the value of our contribution. This sequence is killing people. And frankly, the world far too often wants us to believe that if we visualize with enough intention, there's a fantasy fairy that's going to somehow magically manifest it. And so people keep going down that road believing that there's just something they're missing. They must not be doing it with enough intention. It's the wrong road. It's the wrong road. You can't create wealth in fantasy. You get an inspired idea that ignites your passion. You do the work, you'll create.
Right.
That's how you create a dream.
Interesting, yeah, because there is a lot of people that say, that believe in the fantasy fairy, I guess is the way that you put it, right?
Millionaire magic doctrine.
Interesting. And certainly...
Hope nobody blows up my home after saying that.
Yeah, and it's not necessarily categorically wrong, it's incomplete, is I think what you're saying, right? I mean, having, a dream, but then I can remember a long time reading an article saying that you have to also become a dream merchant. You can't just have the dream, but you have to take some action. So that's a fascinating view of it, and I think probably one of the most important elements, as you're describing it, is that you have the motivation, and that drives the work, so that you have the fuel to be able to go out and create, because it takes energy.
Let's distinguish between I'd like to have versus I want to create.
Great distinction.
Yeah.
Yeah.
I want that. I want that to happen. Well, it doesn't happen. It gets intentionally created.
Yeah.
If we get that distinction down clear, we're going to have a whole lot less pain and suffering in the wealth creation process. Because too many people want it manifest. Too many people want it to just appear. It doesn't work that way. I could scream about this because there are just too many people who have pursued that easy path, that easy button, and to a person, they're broken, and angry.
Interesting.
I've taken this on as a mission, not to make the person wrong who's teaching manifestation, to help the person who wants to create a dream actually create it. I don't want to speak disparagingly about someone who might teach something that's driving people into fantasy. I just know we need to have a louder voice out there to show people how to actually create a dream. So it's not about dreaming, it's about creating a dream. I recently wrote a song with Randy Karchner. Matter of fact, I'll get a copy of it. Maybe you can share it with the program. But it goes like this: deep in our dreams, where the whispers are real, words softly spoken, voices we feel, calling us higher than we've ever flown, giving us wings to a world yet unknown. Dream, come with me and dream. Putting all the fears behind you, the tears that blind you, the chains that make you scream. Just dream. The burdens of life kill our purpose and peace. Broken and angry, we cry for relief. But dreaming inspires us to reach for the stars, healing our wounds and removing the scars. Dream, come with me and dream. Putting all the fears behind you, the tears that blind you, the chains that make you scream. Come with me and dream. Putting all the tragedy behind you, letting hope and joy remind you to become the one that finds you when you dream. Remember all the pain and fear that has crushed your life and stole your dreams for years? Reach deep down inside your soul. Feel the flame that burns. Declare the truth you know. Dream, come with me and dream. Putting all the fears behind you, the tears that blind you, the chains that make you scream. Come with me and dream. Putting all the tragedy behind you, letting hope and joy remind you to become the one who finds you when you dream. Now, someone might say, are you selling fantasy? No. We've got a lot of people in society so beat down by life circumstances they don't dare dream, because when they have, in a fantastical way, they just got hurt. Our invitation is come and dream. Then let us show you how to actually build a foundation underneath that. David Thoreau said that. If you've got castles in the sky, that's okay. Keep them there. Now build a foundation underneath them. Have a dream, a worthy dream. Now have a worthy income generating vehicle and do the work of working on it, serving the people, and create the revenue and fund the dream.
Well, on that note, sir, a note of with a beautiful tone. So thank you for sharing that. I just want to say that I very much appreciate you, your spirit, your purpose, and the fact that you took your time to sit here and share this with our audience. So thank you so much.
You're welcome. It's been a privilege.
To see the next episode in the Money Revealed series, check the video right there next to me. I think you'll love it. Continue to believe, and I'll see you there.
Entrepreneurs rise from anywhere. Poverty doesn't need to be explained.
Right.
Really what needs to be explained is our wealth, our prosperity. Where did that come from? And how do we get more of that?